Without further ado, I now deem it a privilege to invite Professor Lakshman R. Wattawala, Founder President of CMA Sri Lanka, to deliver the welcome address.
Good afternoon to all of you. Let me welcome you to the CMA Sri Lanka Budget Highlights 2024, Analysis of Tax Proposals and Impact on Business, Economy and Society. So we are very happy to have with us the Secretary, Ministry of Finance, and also the Secretary to the Treasury, Mr. Mahinda Siriwardana, and he's our keynote speaker, so let me welcome him with a big round of applause from everyone. Of course, we have our other speakers. Can I ask Mr. Hennaka Bandara also to come up? Today is a very important day for us because we have a very good lineup of speakers. If you see the Secretary, Ministry of Finance. First of all, let me say that this budget has been presented at a time of a grave crisis. Of course, the crisis has improved from what it was earlier. So I must congratulate the President and of course the Secretary of Finance and the Governor of the Central Bank, who have been the chief architects of reviving the economy. It's not an easy task to present a budget in this type of situation because everyone is looking at obtaining some sort of relief. It's not only the people at the grassroots levels, but also all our businessmen and others who would have liked to see a lot of tax benefits and others. Unfortunately, this has not been there, but I think they are trying to see as to how the crisis situation could be improved. And in that respect, that's why I said we will be able to get a detailed description from the Secretary to the Treasury, who has been really behind the scene working on it. And I must congratulate them because recently I was listening to the Governor of the Central Bank. He says of the type of the very great improvement that has taken place on the interest rates applicable to investors and others, where the interest rates have come down. And of course, the inflation rate, it was in 2022, it was about 60 to 65%. Now it's between 1.2 to 1.5%. It's a big achievement. Also, the necessity for building the reserves. The reserves through have been built, and it's about 3.5 billion. So this shows that we are on the path to recovery, but we have to go a long way. Connected with this, you find, in fact, I heard also at that time, that while these ministries and departments are working very hard, they are working day and night, we still find that the other people are really not pulling their weight. One of the main areas is the electricity industry. We thought that at the first increase, we all had to give in because the IMF money had to come in. But then they should have learned a lesson. They should have been told, either by the IMF or by the authorities, that you need to become efficient, you need to become productive, you need to cut your wastages, and then to reduce the price. But what did they do? They increased the price. People are shouting on the roads. So I think this is a job that is a teamwork. Everyone has to play their role. You, most of who are here, are from the private sector. You know the amount of work that you put in. You know the hard work that you do. You know that you are the mainstay of bringing in the foreign exchange to this country. So in a similar fashion, all government departments, government authorities have to do this. Otherwise, we will never be able to come out of it. Look at the education sector. The school exams are not held on the correct date. All our children are going abroad. Universities are unable to produce a graduate at the age of 22 years. Now it is 25, 26. All are going abroad. So if we are to fix this, it is not something of the president or the finance ministry or the central bank. Everyone has to play their role. They have to take the responsibility and then do it. This is seen, you see, because I will just tell now the Honorable President, what did he say? He was speaking, you see, about Lord Buddha, the Samajivikata, the Sutra. You see, of the balance living, income and expenditure. All of you who are here are doing that. If you don't do that, you will never be able to exist. But when it comes to government, they think that the money is coming from somewhere, I don't know from where. So they have to really realize this, that what money has to be earned, because earned money is coming from the taxpayer. The taxpayer, you who are seated here are paying the money. Then that money has to be fruitfully used. Of course, we know that in all these government institutions, there is overstaffing. There is a lot of people to whom we are paying. So what we have to realize, if we want to stop the brain drain, if we want to keep the technical people in this country, if we are to keep the professionals in this country, then we can't pay to maybe subsidize some unnecessary, unimportant people. The country is going to lose. All the IT technicians are going, doctors are going, engineers are going, doctors are going. Then we have to see a way how it can be kept. As a professional body, I think we have to do this. Maybe I saw that many universities are to be set up. Does the government have to set up universities? They do not have the money. You must now go for public-private partnership. Then the private sector will come and do the job for you. You give the authority. You don't have to put the money. If the government wants to do it, they have to do it. I am telling this because I was not a person only speaking from the private sector. I am also someone who served the corporation sector for 20 years. A great sacrifice I did thinking that this country will be built up. But I am very sad because the situation of this country, what it has become. You see, we set up the 200 government factories program. We gave tax incentives. Today people say don't give tax incentives, but tax incentives are given to attract the investment. Then what happens? The economy starts moving. The people get the jobs. They earn the money. The foreign exchange is earned. That was really something which we not did in one place. Throughout the country. Today they are talking. They can't even do anything because the people are only talking. Today we should have people who can do the job. We don't have people who can only talk. Because I am proud that the Secretary of Finance is here. They have done their job. They have done their job silently. And they have come here to say what they have done to achieve. Only people who do the job are criticized. But the others, if you ask them to come to and do a job, they can't do it. So I think this budget has been given in a very difficult period. We know that we can't have everything, but certain things have to be put right. That is something that we are thinking, that it has to be done, because I'm very happy that the President has spoken of something which has to be practiced by everyone. He has spoken of Lord Buddha, what he has preached. Certainly, you all know, we all know all those things. If you look at some of the global leaders, they are people who practice Buddhism. If you take some of the top executives, Jeff Weiner, founder of professional networking site LinkedIn, Mark Benioff, founder and CEO of American cloud computing company called Salesforce. Then the most notable Buddhist business person from Apple company, the chairman of Apple company, Steve Jobs, co-founder of Steve Jobs. They were all followers. They did and practiced it. Then you go and see a top Korean Buddhist entrepreneur of Samsung. Lee Kuan Yew. He said, you can change everything except your wife and kids. So that's the way they worked. They practiced Buddhism. In our country, people are talking, they are all shouting. Actually, the higher-ups, now that the president has given this, I should say that they should practice it. And mindfulness, that is the great important thing that will help all businessmen. Think of the present moment. Past is gone, but today we have to face the present. So that's what I think. I'm sure that there are many other things that are hinted, but I don't want to take too much of time. But I want to tell you that we have to act. The private sector is here. There are people who can act. They must be given the responsibility. We will do all the projects for the government. Now the other important things, integrity and honesty. That is the most important thing. Today look at the government. If you want to order medicine, that is also played out. Every area, people are dying. You're getting wrong drugs. So that is really one of the major problems, integrity and honesty. Even sometimes auditors have been brought in where certain organizations, which they are talking now, where they say the auditors have not, or maybe not pointed that out. So there are so many institutions, but we need to see that these things could be done properly. Because actually, if you look at the 5 precepts, what does it say? Do not steal. Do not say lies. Are they practicing that? No. So that's what I say. President, I'm very happy that the President has given a start, because you say, when you are in deep trouble, you ask for help from the God. I think now the President has said that go the path of Buddha and they will help us. Thank you and all the best.
Thank you, Professor. That, ladies and gentlemen, was Professor Lakshmanar Vatawala, the mastermind behind all endeavors of CMA Sri Lanka. Next on agenda is the keynote address on the Budget 2024. I would now cordially invite our keynote speaker, Mr. Mahinda Siriwardana, Secretary of the Ministry of Finance, to deliver the keynote address.
Thank you very much, Professor Vatawala and CMA, for inviting me to this important discussion on the government budget. In fact, I'm kind of, thought of, responding some of the points that you mentioned, because I also think that it's very important. You mentioned about, the need to work hard, integrity, elimination of corruption and all sorts of things, which are very important topics, but I try to cover in my written document or the speech, so that whenever possible I will try to emphasize some of the areas. In fact, Budget 2004 was presented under very challenging economic conditions. I don't have to tell you, every one of us in this room went through that. We experienced by ourselves, not only us, our families and everyone, from Colombo to all the remote areas, everyone went through this crisis. And it is enormous and it is very deep. I want to very straight away tell you that, still I personally see the enormity of this crisis and also the vulnerability of the country. If we are not going to do the right thing, how vulnerable we are is the question that I want to basically ask. That basically, invite you to think about, as Professor mentioned, private sector as well as the government sector to do their job, to basically firmly come out of this crisis. Whilst there has been a remarkable improvement in the economic stability over the last 18 months, Sri Lanka is still in the midst of a deep economic crisis, as I just mentioned. The budget speech touches the structural legacy issues inherent in the economy, and it requires a collective effort over the long term to reset Sri Lanka's economic trajectory. This budget is part of that long journey towards economic recovery. At the same time, I would like to invite you to analyze the budget with a holistic view, taking into account the developments in the recent past, new realities, and the country that we all are envisioning to have in the future to our current generation and also the generations to come. One of the key objectives of the budget is to ensure that the country stays on track in terms of achieving the budget primary balance path, We all know that we are under an IMF program. Whether you like it or not, we are now in under IMF program. And we have some contours. We had to prepare the budget within those contours and the framework. So one of the key drivers of the budgetary, so the fiscal consolidation drive is the primary balance, and it is our commitment as the country, as Sri Lanka, to ensure that we meet this primary balance target. All the revenue measures, all the expenditures measures are being basically developed and finalized based on achieving this primary target. So this is the overarching objective of the government budget. And given the fact that public expenditure is rigid and largely on non-discretionary spending such as salaries, pensions, essential welfare, and interest payment, the fiscal consolidation path must be led by revenue measures. There is no other way. If you see the current situation, after the announcement of the debt standstill, we are not getting enough foreign financing. We are getting, but it is limited. But at the same time, we don't have the luxury of getting central bank financing anymore, because with the new Central Bank of Sri Lanka Act, which came into effect starting from September 15th, we are no longer eligible to, the government is no longer eligible to get the central bank financing. So at the same time, we can borrow from the market, and at the same time, we can get sometimes some overdraft or whatever the facilities, but the major remaining item is the government revenue. So there's no option that we have to get our revenue increase. So the budget itself does not include specific tax policy measures, since the required policy measures have either already been announced or are already in place. Key drivers of the revenue in 2024 would be, the increase in the VAT rate, expansion of the base expansion, and also the normalization of imports due to removal of import restrictions except for personal motor vehicles, and recovery of the economy that we are expecting into next year, and full impact of the corporate and personal income tax reforms that were introduced in this year, and also tax administration measures. This is one of the key areas. If you went through the budget, you will realize that we have placed a significant emphasis on the tax administration measures, because we know that, I will give some information, but we know administration is very important if you are to basically get the expected yield out of the tax policy that you have put in place. So the combination of the above measures are expected to enable the 2024 revenue targets to be met. That's the expectation. So there's no doubt that the revenue targets are ambitious and require significant efforts to achieve. This is to be expected as Sri Lanka grapples a debt crisis where it is asking its external creditors to accept large losses on the debt held by them. In the case of official creditors, this is debt provided to Sri Lanka using funds from taxpayers in those countries. In return, these creditors expect Sri Lanka to make a material fiscal effort to demonstrate our country's contribution to the debt restructuring process. This is embodied in Sri Lanka's primary balance path. You can imagine everyone is basically, especially the creditors and institutional investors, are looking at, because it is not a secret that we are implementing IMF program. Basically, we are moving in two paths. One is the stabilization path, and the other one is the debt restructuring path, which we have made a significant progress by now. So therefore, we cannot look at the budget like any regular budget. We have difficult targets to achieve, and it requires a tremendous and collective effort to achieve them. Accordingly, the revenue targets that we have for 2024 have strike a balance, taking substantial ambition but also realism as well. We are confident that the measures identified previously are sufficiently realistic to achieve the ambition we have set out. As I mentioned earlier, tax administration is very important. With the recent changes, the tax structure is largely in place with the focus on a few core taxes, such as corporate and personal income tax, VAT, and core excises on alcohol, tobacco, and fuel. The government's focus now is on enhancing tax administration, as I mentioned, compliance and digitization. It is important to understand that Sri Lanka's tax administration is saddled with deep, long-standing legacy issues. The weaknesses in RAMIS system, that is the Revenue Administration Management Information System, a system introduced in 2013, is a reflection of this. There's an urgent need for institutional reform, digitization, and change in practices as well. These constraints cannot be resolved overnight, but we have to start somewhere. So at present, a comprehensive effort to improve tax administration and compliance reform is ongoing. Many of these measures are reflected in the budget such as risk-based audit and expanding TIN coverage, among others. There are several initiatives taking place in parallel, many of which are also covered under the IMF and World Bank reform programs. I just want to give some additional information in this moment because not only the IMF, there are 2 programs which we are implementing under the ADB as well as the World Bank assistance. Especially World Bank program involves many of these similar reforms under the development policy loan that we are basically working with the World Bank. And these measures include the following: digitization, number 1, online filing of returns for corporate payers is now mandatory, and the same is being applied for individual income taxpayers. This is another step that will reduce interactions between taxpayers and tax authorities and improve data analytics. Information sharing is also important. The tax authorities are better able to identify conspicuous transactions that signal tax liability when there is robust information sharing between institutions such as the Registrar of Motor Vehicles, Land Registry, financial institutions, among others. At present, such information is shared in a limited manner, but measures are being taken to make such information sharing systematic and time-bound. The legal framework to enable this has already been established. It is one of the requirements under World Bank. With the tax areas, whilst around 80% of the uncollected taxes are due to legal disputes, the tax authorities are expected to make enhanced efforts to collect tax areas that are not subject to dispute. The IRD, in fact, is making a renewed effort in this regard. I have to recognize that as well. And going forward, the collection of such taxes will be monitored by strict targets and KPIs, ensuring the ratio of uncollected taxes to revenue continues to decline. On-time filing, documentation and filing process will continue to be simplified to facilitate on-time filing. On-time filing ratios will be monitored to ensure they reach global practice standards. And next come the most important thing, the expenditure management. As mentioned at the outset, the government expenditure in Sri Lanka is largely non-discretionary in nature. The budget speech mentioned the extreme challenges faced in treasury cash flow management, given the monthly expenditure on salaries, pensions, essential welfare, interest costs, amidst revenue that remains significantly lower than mandatory expenditure and limited financing options. I just mentioned the limitation that we are having. However, the Minister of Finance, His Excellency the President, also quite rightly mentioned that any areas of wasteful, non-priority or inefficient expenditure must be eliminated. Towards this end, the government issued a series of circulars in 2022 April, imposing strict disciplines on spending in areas such as overtime, travel, events, or other non-priority expenditures. These disciplines have continued and are also reflected in the budget call for 2024, thereby underpinning budget allocations for next year as well. This year, the government initiated the process of zero-based budgeting. 10 of the largest spending heads were subject to this process. Accordingly, a committee comprising representatives from the Treasury, line ministries, and private sector experts examined the spending structures of each of these entities. The respective ministry had to justify with cost-benefit analysis all expenditure lines, including legacy practices. This enables the identification and gradual elimination of non-productive, inefficient expenditure. The reports of 7 of these committees have already been published, and their recommendations are being implemented. The same principles were imposed in the 2024 budget call as well. In fact, those are available in the Ministry of Finance website. You can basically download and you can go through the reports, you can basically examine the findings and also go through the recommendations, and you can basically make voices if you wish to basically get these proposals implemented going forward. The other key aspect of the budget speech also makes reference to enhanced discipline in capital expenditure management. A new process has been implemented where the capital expenditure proposals undergo a more thorough screening process to ensure that only projects with an acceptable economic and social return and appropriate financing structures will be accommodated. In this context, capital expenditure is expected to make a significant impetus to economic recovery and growth in 2024, with capital expenditure being increased to 4% of GDP next year. This includes resumption of some of the temporary suspended projects, because as a result of this debt standstill, most of the projects got stuck. With the expected conclusion of the debt restructuring process and also with the expected approval of the first review of the IMF EFA program, we hope that starting from next year we would be able to get this foreign financing back and then revive all these, temporary suspended projects. That's what it means here. And in addition to that, there are some other specific allocations into some of the sectors, considering the importance and also the necessity of, implementing these to provide some facilities to the public. So the other key aspect of expenditure management has been the significant reduction in transfers to state-owned enterprises. Due to a major reform effort, including cost-effective pricing and balance sheet restructuring of the fiscally significant SOEs, the losses of these entities have declined dramatically. In fact, the 52 large SOEs accounted for a collective loss of 727 billion in the first 8 months of last year, but this was converted into profit of 313 billion in the corresponding period of 2023. You can go to the fiscal management report and there's a specific table which gives the performance, the profit before tax performance of these 52 agencies. And this is the outcome. Therefore, whilst the last year the government had to provide a large allocation for the Ministry of Power and Energy to settle some of these losses, this year that allocation was put in more productive use. There has been a lot of public debate about the impact of increased spending on the public sector. However, the increase in the cost of living allowance for public servants accounts for around 8% of the total increase in expenditure in 2024. Over 75% of the increases in spending is due to interest cost, capital expenditure, and the bank recapitalization. I want to basically specifically add some words on the interest payments. Next year, the interest payment alone will be about 2.6 trillion. So that's the significant, cost that we have to, make due to various reasons and basically due to the legacy issues and legacy debt. So the question is, with the debt restructuring, we'll be getting some leeway, but at the same time, going forward, how you basically manage in such a way that this interest expenditure would be lowered. In fact, it's about 8% of GDP next year, and our expectation is that with the improvements in the economy and also with the improvement in the macro stability, we would be able to, and also the reduction of the government debt as a result of the fiscal discipline and also the debt restructuring, we would be able to basically gradually lower these interest payments going forward. There is, of course, room for improved efficiency in allocation of public spending. For instance, with regard to expenditure on the military, this is one of the specific things that I got a lot of proposals this year, and I remember last year also many people claim about this. It is impossible to reduce spending overnight since the vast majority of expenditure is on salaries and provisions and also food and uniforms for the forces. The reduction of military expenditure must be implemented in a gradual and systematic process. In fact, the government has initiated Defence 2030, which will identify means of right-sizing the security forces with a view to reaching an appropriate balance between personnel, technology, intelligence, and so on. This is just to mention one example. And if I talk about the fiscal part and the budget implementation, the budget has focused on allocating expenditure to growth areas to address public hardships and stimulate sustainable growth. At the same time, there are ambitious revenue targets, as I mentioned earlier, underpinned by the clear policy and tax administrative measures to ensure the targets are realistic. Together, these measures are expected to ensure that achievement of 0.8% of primary surplus in 24, keeping Sri Lanka in with fiscal path that is watched closely by the IMF and our external creditors. They are very closely monitoring the performance of the Sri Lanka budget and also whether we are sort of, committed to adhere to the fiscal consolidation path. At the same time, the budget process proposes numerous reforms to drive long-term, sustainable and equitable economic growth. Priority sectors such as SMEs, agriculture modernization, trade, investment, the green economy and digitalization all receive required allocations and policy direction through this budget. It is now down to implementation, where it is not only the government but all stakeholders have a role, as emphasized by Professor Vattawala. I call upon institutions such as the Institute of Certified Management Accounts to contribute to this process It is up to the government and stakeholders like you to collectively establish a mechanism where all groups are able to effectively contribute to the implementation of proposals in this budget. Because your support and your contribution is very important. To me personally, this is no longer a task that could only be done by the government, because the crisis is such deep that everyone will have to get together if we are to basically come out of this crisis. That is the strong message that I want to, as a professional, I want to give this message very clearly to you, because we all have to make some sacrifices and contribute to this as Sri Lankans, as a nation, to come out of this very deep crisis that we are in right now. And in the past, whenever Sri Lanka has undergone a reform period and stabilization is achieved, the tendency has been to slip back into old habits. The country can no longer afford such slippage in the absence of economic buffers to withstand any further shocks, because we don't have buffers, so there's a risk of having some shocks, so we have to be prepared for that. And therefore, it is essential that legislation is put in place that helps lock in the reforms that are being implemented. The Ministry of Finance is in advanced stages of drafting the Public Financial Management Bill. The PFM Bill provides the legal framework to support the ongoing fiscal reforms. This includes robust fiscal rules, enhanced discipline on budgetary processes, developing the medium-term fiscal framework, improved transparency, and clear oversight on budget execution. The legislation is expected to be in place by early 2024. This is a very, very important piece of legislation, because we should not allow this particular legislation to have the same fate that we had in the Fiscal Management Reform Responsibility Act that was introduced in 2003. That FMRA had these sort of targets, but those were never binding targets. And there was, at least to me personally, I didn't expect and I didn't observe that there was a serious effort by the government to achieve these targets, right? So this is the sort of new legislation. In fact, we had a lot of consultations on this with the international organizations and other countries, and we try to get the most rather latest sort of legislation to ensure that fiscal management, responsible fiscal management and fiscal discipline is in place in this country if you are to basically achieve these fiscal consolidation targets and also to achieve the fiscal targets that we are talking about. Otherwise, no point of having these sort of efforts if someone else is going to come and basically ruin everything. So we want to basically at least to prevent it. But in addition to the PFM law, there will be other legislation, including the debt management law, procurement law, SOE law, PPP law, among others, which are expected to look in the fiscal reforms being implemented. However, we are aware that legislation, as I mentioned earlier, alone is not sufficient to drive meaningful change. Sri Lanka's experience with the FMRA legislation of 2003 is testament to that. Therefore, along with the legislation, it is essential that all stakeholders, that is the parliament, government officials, civil society, academia, the media, and the general public, all become stakeholders in this process to support the implementation of the PFM bill and other legislation to ensure that fiscal discipline in the country remains on track into the long term. So I would like to conclude my remarks. As I mentioned earlier, this is a journey to get a country that went through its worst economic crisis in the post-independent history. It is not an easy task. In that context, the 2024 budget makes a significant break from the past. Over the years, Sri Lanka has expected successive government to play a major role in all aspects of the economy, from commercial activity to providing social welfare and being the employer of last resort. However, tax revenues have declined at the same time, leading to a steady build-up of debt, which eventually was no longer sustainable, resulting in an unprecedented economic crisis that we experienced last year. To avoid a cycle of repeat crisis in the future, it is necessary for Sri Lanka to change this social contract. The 2024 budget sets the foundation for such a shift in the economic path of the country. This also requires a major shift in terms of governance. Sri Lanka became the first country in Asia to conduct a comprehensive independent diagnostic of governance structures and corruption vulnerabilities. Many of the findings of these diagnostics are already being addressed through a comprehensive action plan. Corruption must be eliminated, and all stakeholders must work together to reset Sri Lanka's governance culture. Economic management must be underpinned by evidence-based policymaking and willingness to respond to changing economic circumstances without being rigidly fixed to personal dogmas and political ideologies. The failure to do so can have devastating implications, as Sri Lanka has experienced in recent past. This week, we have seen positive developments in terms of enhanced accountability in terms of economic governance. This is expected to ensure that present and future policymakers do not make the same mistakes. Sri Lanka once again finds itself at a crucial crossroad. The reform measures implemented over the last 18 months have resulted in material improvements in the macroeconomic position. However, it should be clear that while Sri Lanka has achieved a degree of economic stability in the current context, the country is far from a stable equilibrium. There is a long way to go to address the deep-seated structural imbalances in the economy. Unless these reforms are undertaken, fiscal discipline becomes entrenched, and the structural imbalances eliminated, Sri Lanka will necessarily slip back into a crisis much worse than that experienced in 2022, given the lack of any economic safety buffers right now. Sri Lanka can continue along the reform path that has enabled the country to gradually emerge from the deep economic crisis, or it can take shortcuts and seek unsustainable relief and deviate from this path. The second option will no doubt lead to a return to a crisis far worse than what we collectively experienced in 2022. As professionals, it is our responsibility to help navigate the country through this challenging period towards a sustainable economic path that will provide prosperity for all citizens in the medium to long run. With that remark, I would like to conclude my speech, and thank you very much.
That, ladies and gentlemen, was Mr. Mahinda Sirivardhana, Secretary of the Ministry of Finance. Thank you, sir, for your time with us this afternoon and for imparting your knowledge for the furtherance of our discussion amidst your busy schedule. Please accept this token of appreciation on behalf of CMA Sri Lanka and all of us from the hands of Professor Lakshman R. Watawala. A big round of applause, please. Thank you. We now have Ms. Sureni Veeratunga, Senior Research Analyst of Verite Research, enlightening us on the budget of 2023, its accountability and transparency. Over to you, madam.
A very good afternoon, everyone. I'm deeply honored to have been invited by CMA Sri Lanka to discuss the accountability and transparency of the national budget of 2023. The current year's budget, actually. With a tight 15 minutes window, I'll dive straight into the analytical overview of the top line items of the 2024 budget before focusing on the crux of my speech, the accountability and transparency of the 2023 budget speech. As Mr. Mahinda Sirivardhana rightly said, Sri Lanka has long grappled with issues of transparency and accountability in handling public funds, contributing to poor public financial management and playing a central role in the ongoing crisis that actually began in 2022 when the country actually struggled to meet its debt obligations. The erosion of fiscal transparency has significantly undermined the government's credibility, which is essential for implementing reforms and programs, both domestically and also in dealings with international entities such as IMF. A lack of transparency and accountability sets a stage for failure. The 2024 budget speech delivered on November 13th in the Parliament is of course crucial in setting the government's priorities for the upcoming year. Since the 2022 interim budget, each budget has played a pivotal role in steering the economy through challenging times. The 2024 budget projects a revenue at 13.1% of GDP and expenditure at 22.2% of GDP, leading to an anticipated deficit of 9.1%. This represents a 19% increase in the budget deficit from 2.4 trillion to 2.8 trillion. For the sixth consecutive time since 2019, we're breaching the Fiscal Management Responsibility Act's deficit limit of 5% this year as well. And right now, while we have the FMRA and while we were breaching the FMRA for many, many years, now we're talking about another act, which is PFM Act, which the government is planning to implement starting from January 2024. The PFM Act is currently being worked out with the help of IMF and Ministry of Finance. In terms of revenue and expenditure, the draft budget estimates which was published, which was actually got tabled in the Parliament on the same day, forecast a tax revenue of 3.8 trillion, a 47% increase over the revised figures of 2023. Taxes on goods and services are expected to contribute 58% of this revenue, and taxes on income and profits contributing to another 28% of this revenue. Notably, VAT collection is projected to increase by 106% this year compared to 2023, and import duties 99% increment is expected next year over 2023, and the special commodity levy, again a tax on imports, is expected to increase by 90%. The tax collection is expected to increase by 90% next year. So those are such large tax collection expectations for Sri Lanka, of course. However, a persistent issue in Sri Lanka is the failure to meet revenue targets. For the past 20 years, if you look at Sri Lankan government's performance compared to actual revenue targets we set at the beginning of the year, we have constantly failed for last 20 years in a row to meet our revenue targets. Therefore, this raises a concern about the feasibility of meeting the ambitious 2024 revenue targets unless the government takes steps to address tax non-collection, such as casino taxes, and then tax evasion, of course, and the discretionary exemptions we have currently, for an example, the SEL. On the expenditure side, the government's total expenditure excluding debt repayments is estimated at 6.6 trillion, according to the draft estimates. Historically, debt amortization, if you look from 2014 to 2022, debt amortization or debt repayments as a percentage of total expenditure including debt repayments was only about 26%. However, in 2023, as of the latest revised figures, debt repayments as a percentage of total expenditure including debt repayments is 65%. And this is the highest since 2014. And in 2024, the figure is expected to go down to reach an unprecedented 16%. And there's no analysis to justify this number, at least in the public domain. With the new budget speech generating a lot of excitement, it's very important that we realize that budget formulation is of paramount importance. But if a government is taking actions either contrary to their own plan, or if they don't do things as they say, and yet come out unaccountable to public, covering up the actions, and then the goals, the targets that they set at the beginning of the year definitely goes for a 6 when it comes to implementation. Coming to the crux of my speech, I would like to turn your attention to the implementation of 2023. I was specifically asked to talk about how good the government has done in terms of the 2023 budget. Therefore, I'm focusing on that more. It's very crucial to recognize that we can have a well-crafted, well-devised plan. But it is only good as when it comes to implementation. If they're doing good only, the plan is going to be great. The success of a budget is, of course, measured by its impact on economic stability and the achievement of its targets, emphasizing the need for diligent monitoring on the budget execution. I will share some insights from our mid-year progress of assessment of 2023 budget proposals, highlighting the ongoing issues of transparency and accountability in public financial management, which have been the central issue to the crisis that actually began in 2022. Verite has been actually monitoring this government proposals, the progress of the government budget proposals since 2017. We assess these proposals in terms of openness and in terms of the progress they made. Our latest assessment aimed to determine whether the government has actually changed its ways when it comes to the implementation, because whether the government has actually taken corrective actions in response to the challenges that emerged starting from 2022. Actually, it's not, the challenges didn't start in 2022, it surfaced starting from 2022. Has actually there been a shift of government actions to regain public trust and confidence, even the international market confidence, which they lost at one point of time. So, regrettably, our findings suggest otherwise. In Annexure 3 of the budget speech made in 2023, if you look at the total, there was a total of 49.5 billion worth new budget proposals, and with the top of 25 proposals accounting for 49.3 billion. A recurring issue since 2019 is the presence of proposals without a budget allocation or estimation. This has been a trend, and the trend has worsened over time. For example, even in the new budget speech, there are proposals without a budget allocation. For an example, there's a proposal to establish new 4 universities, and also another initiative with IIT Chennai for another university in Kandy. But if you look at the budget speech, none of these budget proposals has a budget allocation behind these proposals. I actually took a rough count to see how many proposals are there without a budget allocation, and unfortunately the count is over 20. So there's more than 20 proposals without a budget allocation or estimation. Therefore, it raises concerns about deviations from estimated expenditure and the reflection of policy priorities in the documents presented in the Parliament on 13th. Further, if the government is to actually implement these proposals, which they promised without an allocation, they will definitely have to reallocate the existing funds. Our assessment actually identified 2 chronic issues affecting budget's credibility. First is actually, the first is actually the poor implementation of the budget proposals. A staggering 68% of the proposals tracked in this assessment lacked sufficient information to assess progress. Breaking it down, 48%, no information was disclosed to assess the progress of these, and another 20, whatever we were given was insufficient to assess the progress. So basically for 68% of the proposals made in the budget, we couldn't assess the progress for the mid-year. This is with reference to the 2023 budget speech. This lack of transparency encompasses both lack of proactive disclosure and reluctance to respond to RTI requests. In monetary terms, this means proposals worth 47.7 billion rupees, representing 97% of the allocated funds, could not be assessed. So basically, we don't know by mid-year 2023, what happened to 97% of the money allocated from last year's budget speech. Only 2 out of 25 proposals we tracked were progressing on track, and 6 were lagging. The second chronic issue that we identified is lack of transparency on the progress of these proposals. So the National Budget Department, to an RTI request, identified 15 implementing agencies for these top 25 expenditure proposals. Astonishingly, 14 out of 15 violated Section 8 of RTI Act number 12 of 2016, which mandates biannual publication of reports detailing budget allocations, plans, proposed expenditures, and disbursement reports. So it is a legal requirement for every minister, every ministry to publish biannual reports, including all the information that is on the slide. However, it's only Ministry of Fisheries published this proactively on their website. However, their progress for this particular proposal, Inland Fishery Development proposal, with an allocation of 100 million, was found to be lagging, yet this proactiveness should be greatly appreciated. This is actually what we advocate for. There are instances where ministries could be lagging, where they couldn't take the actions according to the plans they made. Yet it's very important to be accountable to public and transparently share information on the implementation of these budget proposals. Since 2022, there has been a growing demand for accountability and transparency in Sri Lanka. Despite the call for transparency and accountability, our data actually shows that the government has failed to disclose 70% of the information on the expenditure proposals we tracked in 2022 during 2022 and 3, which is a significant increase of the 45% non-disclosure rate between 2017 and 2021. This actually indicates a worsening of transparency situation despite heightened calls for transparency, governance, even under the current IMF program. This actually raises a quite serious doubts about possibility of sustainable change in fiscal culture of Sri Lanka. We really want to change things, but at the end of the day, does the talk walks, or does it stagnates, or does it not ever happen? So knowing what caused the crisis, the government is still repeating sometimes certain old ways, expecting different outcomes, which is unacceptable as public, as independent bodies. And I'm afraid that if such practices are to repeat this year as well, then it won't turn out good for the whole country. As we all know, in 2024, we are expecting an all-time high revenue, tax revenue, and a positive primary balance of 0.8% of GDP and success in debt restructuring. Even in the current IMF program with the IMF, the government has made several commitments to improve fiscal transparency, and several recommendations also have been made by the IMF in its governance diagnostic report, highlighting the importance of improving fiscal transparency to restore and sustain economic stability. Even in the budget speech 2024, it has been highlighted that Sri Lanka suffers from a governance-related structural issues, yet we see minimal effective actions. Actions are announced, actions being taken. The problem is effective actions are being taken. The key issues we identified, the first one is there's lack of ownership when it comes to budget proposals. So, for the mid-year assessment, right to information requests were submitted following national budget identifying the agencies, the responsible implementing agencies, which means either ministries or government institutions. However, during the interim budget assessment for 2022, NBD, the National Budget Department, was unable to identify the agencies responsible for 71% of the tracked proposals, while for 2023 media, it actually came down, which is good, 44% of the proposals, yet they couldn't identify the implementing agency in one go. What do I mean by this is, let's say we have a proposal to implement or establish, this is just an example, to establish a university. So National Budget Department should know which ministry or which institution is responsible in implementing this. However, 71% of the proposals in the interim budget, NBD couldn't identify that in one go, and the RTIs got transferred due to different ministerial agencies. And then in 2023, it got only 44% they couldn't identify in one go. So the NBD is actually under Ministry of Finance. It is responsible for the formulation of the budget, of course, and also the monitoring of the implementation of the budget. So we couldn't find why this happens even after them being responsible for the monitoring implementation of the budget. And then we identified a particularly troubling pattern, which is repetition of promises and continuously failing to fulfill the promises. So we've observed the government's consistent failure to deliver on its promises. Actually, the trend unfortunately continued to 2023. For example, despite repeated assurance to establish new export processing zones, not a single one has been fully implemented in the last 2 decades, according to the trade experts. The stagnation poses a significant obstacle in attracting investors, particularly when contrasted with one of the more efficient services offered by nations like Vietnam and Malaysia. If there's countries who's already offering good services, investors won't invest here. And to make it even harder, we have so many barriers in place. In Sri Lanka, the challenge of land availability has been a major deterrent to investors. Successive budgets have actually promised, since 2017, have made promised to promote investment zones. But these have actually remained mere declarations. Yeah, so these are the proposals since 2017. Every budget speech made regarding promotion of investment zones. As you can see, according to our India assessments, it was either partially fulfilled or undisclosed, or it was never done, basically. This stagnation actually poses a significant obstacle for us to attract investors. And even in 2024 budget speech, which was read in Parliament a few days back, there's a proposal to establish new investment zones centered in Hambantota, Jaffna, Trincomalee, Bingiri, and Kandy. Further, the budget proposes to actually control these specific investment zones through a new body called Infrastructure Corporation. The Infrastructure Corporation actually has an allocation of 250 million. However, this new proposal to again establish investment zones in the 2024 budget does not have an allocation behind. So there has been promises with huge allocations. This budget, there is a proposal or a promise without an allocation. The 2020 Auditor General's report also highlighted this issue of failing to keep the promises. He actually stated in his report that proposals made since 2014 to establish new export processing zones have failed to materialize as planned. This lack of follow-through is critical, especially considering our urgent need to expand imports and domestic production. Since we have people who can drive the change in the room, I'm going to wrap up my presentation with 4 key recommendations. We've identified these, which are not difficult to implement, do not need or do not require new bodies, do not require new passing of new regulations, We have enough and more bodies, we have enough and more regulations and laws. It's just a matter of people who has power, who are in positions doing their duty. So firstly, this is actually the Auditor General report actually saying the same concern we identified since 2017 to 2023. And these are very simple 4 key recommendations. First one is, when proposals are submitted to the budget, back them with supporting documents, what were the assumptions and what is the analysis. So as we've, when we were analyzing few proposals back some time, pardon. So yes, as even last year's budget, there were some proposals which we identified as lagging. Also, this one proposal is actually the implementing agency was Department of Animal Production and Health, and they have a financial constraint because the allocated budget was not enough to complete at least one of the 5 actions that they outlined. So this happens because sometimes there's no analysis behind the proposals. Every proposal can have at least 1 page of analysis and what are the assumptions, then we can justify these allocations. Even in this budget, almost all the allocations, most of the allocations at least I would say, are over 500 million for one proposal. So this is a lot of public funds being utilized. So it's very important that there's being a justification for each proposal. And then correctly identifying the implementing agencies. This lies with National Budget Department. And the second is formal oversight. Third is formal oversight of budget implementation by executive and legislature. We have so many parliamentary committees. We have an independent national audit office. Apart from that, we have legislature and the National Budget Department under Ministry of Finance. So we have plenty of bodies. It's just a matter of them exercising their power and doing their duty. And the third one is timely and consistent disclosure of information on ministry website. This is actually a legal requirement under the RTI Act 12 of 2016, Section 8. Minister is responsible to publish biannually the progress, what happened with what happened to allocation, how much was used, and everything. So basically, as I said, only one agency out of 15 we monitored proactively published this, and others are simply breaching an act. So this is the problem. We have acts, we have bodies, we have regulations. It's just a matter of doing our jobs right. And thank you very much. I'm going to quickly wrap my speech with this. Thank you very much, Professor Watawala, for having me, and thank you.
That was Ms. Sureni Viratunga, Senior Research Analyst, Verite Research. Thank you, Madam, for your time and effort in contributing value to our discussion. Next on agenda is the discussion of tax proposals of 2024. We are pleased to have with us for this discussion Mr. Nistar Suleiman, tax partner at Ernst & Young Chartered Accountants.
Thank you for that introduction. Firstly, let me thank Professor Watawala and CMA for giving me the opportunity to present our view on the budget. In a summarized form, we'll be focusing more on the tax changes, but also certain areas in relation to business and investment as well. So we'll cover the economic impact of the budget very briefly. I think it was covered in terms of the numbers. Opportunities for growth and investment, and proposals to enhance revenue. So this is a quick snapshot of the numbers, which most of you are probably aware of, but as you can see from the 2023 estimate to what is proposed in the budget, we can see a significant and ambitious target on revenue. Almost more than $1 trillion rupees over last year. Tax revenue will be the biggest contributor to that increased revenue. Again, over $1 trillion rupees in taxes more than last year is what's expected. Total expenditure also not letting up, equally growing over ₹1 trillion there again, leaving us with a budget deficit of 2.85 trillion. Right? So our expenses are going to exceed our income by 2.8 trillion rupees. And that is to be funded by debt, primarily local debt, domestic debt of 2.1 trillion, and the balance 726 billion is to come from foreign debt. The positive number there is the last line where tax to revenue is increasing from, tax to GDP is increasing from 10% to 13%, so almost a 30% increase in that ratio. So the big numbers, so very ambitious again, total revenue to go up by 45%, not a small number, 45% in terms of revenue increase, 47% in terms of tax increase, and out of the tax increase, 62% is to come from indirect taxes, meaning VAT and SSCL and customs taxes as well. Other non-tax revenue will go up by only 18%. So the key, I think, more than tax, so you don't see any significant tax proposal in this. There's a few on consolidation, technology, and so forth, improvement of compliance. The thrust has been growth, and everyone has been expecting growth. So we highlight about 5 to 8 areas of proposals that will hopefully help in growing the economy at a large scale. The first is the digitization of the private sector, and here we are expecting, and I think the Treasury Secretary also confirmed that at a session yesterday, that the digitization will help sort of level the playing field in terms of those who are paying taxes and those who are not at the moment, right? And the call has been from all sectors to increase technology to ensure everyone falls in line. So this is a strong proposal, but how long it will take is what is important, and we are expecting it to take come into fruition next year, starting with the tax departments and then connecting all of the revenue authorities. So it's proposed to establish a digital authority responsible for the digitization of the public sector. The tax authorities being the starting point. Also the establishment of a Technology Innovation Council and a National Center for Artificial Intelligence to boost the public sector. 3 billion is supposed to be invested in that. Then cross-border transactions and gig economy. So here they are looking at sort of the digital economy and bringing a framework which is lacking at the moment in terms of payment systems, fiscal revenue, and employee welfare for cross-border transactions, e-commerce, and the gig economy. So that will bring in hopefully a new source of tax, which is not very specifically mentioned, but something like a digital services tax on e-commerce or transactions where global companies are using the Sri Lankan market and not paying any taxes at the moment. So that is also an expectation in terms of growth in terms of industries. Then strengthening the global economic relations, critical given the small country and the small population that we have. Entering into trade agreements, they're talking about Thailand, Indonesia, Bangladesh, and China, all of which are expected to be concluded sometime next year is the indication we get. Expand the Indian Free Trade Agreement into a comprehensive economic cooperation as well. So that will give us the growth required on the external market side. Increasing competitiveness in global markets, again, a regional comprehensive economic partnership is proposed. Linking with the common system of trade preferences of the EU and enabling Sri Lanka to get opportunities to enter all major markets at a competitive level. Establishing also a National Trade Facilitation Committee that will link up all our revenue agencies in terms of trade, so customs, excise, all on one common digital platform. That again with the digital drive in the public sector is supposed to see fruition next year. And then the other handicap that we have in Sri Lanka in terms of developing IP and trademarks is the registration process. So there again, a process has been promised to enhance this registration process and make it faster, is the proposal. So on debt restructuring, I think there'll be others covering it, but the key area here in terms of budget allocation is they specifically proposed that 3 trillion rupees will be allocated for settlement of ISBs, and that has required them to increase the borrowing threshold from 3.9 trillion to about 7 trillion rupees. So it's mainly to repay the ISBs on the DDR. Then another thrust area, opportunity for investment as well, and a significant reform, if it does come through, is to open up the education system. So any recognized educational institution will be permitted to establish a university in Sri Lanka. This will open up not only the investment side, also the opportunity for our kids to get world-class education. Number 3, to reduce the amount of foreign exchange, which is quite a significant number that goes out. So this will obviously take time, maybe if it at least approvals are given from next year, maybe 2 to 3 years time, the process can start. So with that, they are also introducing a loan scheme which we don't have in Sri Lanka, where students can pay for the loan after they commence employment. Then another target to train people in information technology is also proposed, and a technology university together with IIT University of Chennai, India, is also proposed in Kandy. Tourism, very vague as to what the proposal is, but they are going to reframe regulations to make sure that they promote tourism, is what is mentioned, and they're going to delegate certain tourism-related approvals to provincial councils where the tourism hotels and the sites are. Also, a common branding initiative is to be taken up for attracting tourism as well as investment. On the financial sector, also certain welcome proposals, legislative reforms to the banking sector, proposed reforms on the Banking Act that will prohibit money printing, forcing hopefully some sort of fiscal discipline, stricter rules on credit risk, regulation on the appointment of chief officers of state banks and board members of state banks is also going to be more stringently regulated, and restrictions on individual borrowers also to be brought in. Then on the capital side of the banks, asset quality and capital improvement. There was a review done recently by the central bank to assess the quality of assets in banks, and it was found that there is a significant funding requirement, and they're going to start that with the state bank. So there's a specific proposal to capitalize the state banks in this budget, and they've allocated funds for that. As well as they are opening up the state banks to the private sector. So they are opening up or going to open up 20% for new investment. So it doesn't sound like they are selling a stake, they are going to get in new funds to up to 20% into the 2 state banks, either by strategic investors or they're opening it up to the public. So if this is done via the stock exchange, that's likely to boost the capital markets quite significantly, bringing that liquidity. As well as it will sort of free up that kind of cash for the government for other priorities. And it's also an investment opportunity for foreign or local investors to come in. And they're again on the growth side of the economy. And like I mentioned, the borrowing limit, so this was also clarified by the ST yesterday, that this borrowing limit from 3.9 trillion to 7 trillion is not, that excess is not to spend on anything else, but solely for the purpose of restructuring the debt, the ISBs and the debt restructuring process. So that is the purpose of this increase, is what we understand. Another area for growth that they've looked at is to free up almost, I think, 300 acres of government land for agriculture, and that if it does if it is done in a planned way, it is very likely to enhance GDP significantly. You have State Plantation Corporation, Mahaveli A and B zone, and Land Reform Commission, large amounts of land that are to be released for agriculture, and also some lands that were with the government to be released to farmers who owned them before. Construction, again, the budget identifies as a sector that has been significantly affected by the situation. And there again, they're going to free up land for construction contractors to come in and build. So they're looking at government land where government institutions need infrastructure development. They'll provide that land free to the contractor. Contractor will do the development and charge a rent from that institution until they recover the entire cost of the construction. And then it will be like a BOT where you return the building back once you've made your profit and you've taken your cost out. So that is one area they are trying to encourage or boost the construction industry, and to develop the lands that are coming under urban housing, that are coming under urban estates in Colombo. There are a lot of tenements in Colombo, so they're going to identify those and give those free to construction companies to relocate the residents or provide alternate housing and take the land over and provide construction for large housing as well as malls. So that's the few areas in terms of growth ideas the government has come up with, and areas in terms of rather large scale investment. On the revenue side, enhancement of it, so there was nothing specific in the budget, but it refers to the change in VAT, right? So the revenue, the significant amount of revenue that is coming from the budget, and that we saw that 45% or 47% increase is going to come from VAT is the expectation, and that is going to come from 18%, 3% increase, from 15 to 18% increase in the VAT rate, and a significant removal of exemptions of a lot of items that are currently exempt. So significant changes in terms of certain agricultural products. You have tea, for example, electricity, fuel, all of that is exempt from VAT. Whether all of that will be removed or some of it will be removed, we have to wait and see. The bill gives us some indication, but we are expecting further amendments to that. So what happens in terms of an exemption being removed or a rate going up is that you're going to have, in that transition period, a significant pricing issue, because you have already costed in the input in your during your exemption period. So exemption period will have the cost of your input already there, and when you move to a liable period, you have to put another 18% on top of that, because you can't claim the input on the opening stock side. So important that you clinically look at your costing and your pricing in this period of transition, because there are no transition provisions generally provided for when there is a VAT change. So on the compliance side, they are going to sort of designate new formats for what a tax invoice is going to look like, and they want to encourage a point of sale machine to automate invoicing and recording of sales to support VAT collection. So this doesn't go on to say it's going to be a government proposed thing. They are encouraging it, but in other regions, if you take, they all are moving to what is called an e-invoicing scheme. So if you take India, for example, as a result of the e-invoicing, although GDP is growing at 6 to 7%, government revenue, tax revenue from VAT is going up by 30%, because technology, the e-invoicing system is making sure everybody does comply. So perhaps that is an area the government is moving into with this proposal. They also want to regularize the frequency of VAT filing. So we have some people filing monthly, some people filing quarterly. Everybody is going to be brought into one scheme for return filing. On the individual side, individual taxes, we were expecting relief, but no relief came. They're making it more stringent in terms of compliance. So as you know, in June this year, this list of persons were obligated to file returns regardless of their income status. So earlier, only if you had 100,000 rupees a month were you expected to file a return, right? But now, even if you don't have 100,000 rupees a month, but you fall into any of these categories, so that is either a chartered accountant, some type of professional, you have a registered vehicle, you have purchased or you own any immovable property, you are expected to file a return, right? And from January 1st, anyone over 18 is going to have a tax registration as well. So this budget enforces that if they're going to taking it a step further, if you don't have a TIN, you can't open a bank account, you can't register a car, you can't get a building permit, you can't buy property, right? So TIN is going to be mandatory for some of these significant transactions going forward. Also, action is to be taken, special regulations are to be taken for those who don't file returns on time, and there's additional filing for unit trusts that have also been proposed in order to continue their status as a trust. Then special return filing requirement for the gem industry as well on the withholding tax of 2.5% in an auction that doesn't have a proper format at the moment. And submission of documentary evidence in an audit, right? So currently most of us don't take department audits too seriously. You don't give that information on time. So they're going to bring in a rule that if you don't give it properly in 6 months from the request, they are going to disregard that. You can't bring that evidence again in the appeal process. So it's very important with your filing of your returns that you have all the documentation to support all of the expenses, etc., available. Then there are significant changes for excise taxes, a lot to do with liquor actually. Streamlining the revenue management excise department. They're bringing in a new system there, perhaps like something like Remis. Also excise licenses to be given online, so there won't be a face-to-face meet-up anymore. They're going to make it online to make it faster and reduce corruption. Combating the fake counterfeit stickers on liquor bottles, which is a significant issue for the industry. Revisiting the current restrictions on opening times and the limits of licenses given, again to regulate. And bring in SLS, and they want to also encourage the export of liquor and see how it can become an export industry. On the customs side, similarly, also bringing in a software and linking it up with other revenue authorities, and also measures to remove the para-tariffs like cess and port and airport development levy within the next 3 to 5 years. So those are the few proposals that I want to highlight, and I'll hand it over to the next speaker.
That was Mr. Nisthar Sulaiman, tax partner at Ernst & Young Chartered Accountants. Thank you, sir, for your time and effort in contributing value to our discussion. It is crucial that we know now the impact the budget proposals of 2024 would have on businesses. We have with us today Mr. Duminda Hulangamua, President of the Ceylon Chamber of Commerce and Senior Partner, Ernst & Young Chartered Accountants, speaking on the same. I also have a small announcement to make. Any queries on the speeches can be sent in writing to the front, forward, to be answered at the Q&A session at the panel discussion. Over to you, sir.
Professor Lakshman Vatavala, President of CMA, members on the head table, ladies and gentlemen. I first of all must thank the CMA for inviting me to yet another presentation on the budget. The position taken by the Ceylon Chamber of Commerce on the budget was released to the media yesterday, although the heading was different to what we gave. Some of the newspapers carried different headings. One newspaper said we lowered the budget. We did to an extent, but we had a qualification to say the success of the budget will depend on the speed implementation and the efficiency of implementation of those proposals. Having said that, as you know, if you look at the budget for 2024, it has been presented on the same lines of the external facility agreement with IMF. The macroeconomic stabilization process, which we started a year ago, has been continued. The budget, if you look at the revenue and the expenditure, is a reflection of that macroeconomic stability. Action plan that we got is a continuation of that. The people that I've spoken to, both at the chamber and outside, on the private sector, are raising issues as to what is there in the budget for economic growth. Is a growth-oriented budget. I must say that we always understand the situation that Sri Lanka is in. It is no secret that we have still not overcome the financial crisis. We have a long way to go. We have many more hurdles to jump, many more milestones to achieve. Just because petrol is available now without queues, gas is available without queues, does not mean our problems are over. Yes, we have come a long way from where we were. We have achieved relative stability in stabilizing the economy, but we have a long way to go. So in the light of that journey, there are certain measures that the government has to take to make sure that we primarily comply with the EFF agreement. With IMF board agreement just around the corner, they are looking very closely as to what measures we are taking with the budget. As you know, our choices are very limited. We are a debtor and there is a creditor whom we have defaulted, to whom we have stopped payments, as a result of which we were declared as a country whose debt is not sustainable, as a bankrupt country. So the creditor is saying that I will give you relief, I am willing to give you a relief, I am willing to accommodate your request for a deferment of the debt and the interest, provided I need a third party to guarantee that you will take certain measures in your economy that will guarantee my payment. And the only third party that has come forward to say, yes, I will walk with you and see whether you are meeting these requirements, and to give a certification to you, is only the IMF. So that is where we are at the moment, whether we like it or not. Some like, some don't. But we have, my friend Dharanath is here, we have participated in many discussions, and I don't think we have a path outside that. So the private sector must understand that, however much difficult it is, that is the only path that we have. So if you look at the budget this year, has been prepared in the context of that macroeconomic stabilization program. Now traditionally, if you look at budgets up until 2021, were full of goodies as well as taxes. You found this incentive, that's intensive, capital allowances, tax holidays, reduction of tax rates, exemptions, increase in certain tax rates. Now we can't go that path anymore. It is because we had those mistakes we made that we are now on a corrective path. But that is costly. It's difficult, costly, and time consuming. So that is the background upon which, in my view, the budget has been presented. We as the Ceylon Chamber, I think we played a fair responsible role both before the budget, at the time of the economic collapse, and even now. So we are privy to the discussion, the conversations we have with government as to which is. We have made, for example, it's not that the chamber has not made requests on behalf of this membership. We have done as much as possible. But on the fiscal side, the government is unable to give any incentives. Exporters have been saying, we are paying 30%, we are not attractive anymore. Others are more attractive. But unfortunately, whether like it or not, we can't go that path. So that is the basis on which this budget has been prepared. So there is very little room in the budget for fiscal relaxation. Now, so that is the basic background. Now, having said that, therefore, this year's budget is more focused in trying to see how we can remove the impediments that are bothering investment, that will encourage investment outside the fiscal system, outside the tax laws. So if you go to the budget, you'll find that there are proposals to hand over 300,000 acres of agricultural land to what is referred to as commercial agriculture. We have told the President that if agriculture is to be developed in this country, both for domestic and international markets, that the agriculture must be done on a commercial basis. Each we need to give 1,000, 2,000, 3,000 hectares per investor if it's going to be done at a commercial scale. That's how India is able to manufacture, grow and manufacture agricultural products and produce at large scale and have relatively less costs, which we can't match. So we have to get to that level of commercial agriculture. Now, I would also say that giving the land is not enough. The private sector must also be able to the risk and invest. Now, even last year, when the government offered Shea Plantation Corporation land in the Kurunegala district, there weren't any private sector people who were able to take it. So private sector also must be able to invest in risk areas and try to explore the possibility of exports. Then there is a proposal to encourage private universities in Kandy with the participation of ITT. It's one of the best universities in India. It's equivalent to MIT. Now you need the private sector to take this initiative forward. For you to come and say how to set up the university, how private sector can contribute to this in the country. Then there is a lot of emphasis on single trade facilitation, a single window. And of course, I know on the trade facilitation and single window, a lot has been spoken for the last so many years. Very little progress has been made in the respect. But having said that, I think trade facilitation and single window is one way in which Sri Lanka can open out markets to both Eastern Bloc and the Indian subcontinent. As you know, India, the finance minister of India was here. I don't think we will be able to export a lot of goods to India because our cost of production is very high compared to Indian cost of production. But of course, under the FTA, there's opportunity for a lot of Sri Lankan entrepreneurs to export to India. We have spoken to her and we have asked on behalf of the garment industry whether they can increase the number of pieces that are going under the FTA and duty-free concessions to India, which will be a tremendous boost to the garment industry, especially in the context that the Western markets, there's a drop in demand at the moment. So there is opportunity for us to export more to India, including tea, if possible. And if we can get into, of course, these are medium-term plans, we can get to the RCEP countries, we can get the FTA with Thailand and Singapore done fast, then there are access to markets for those products who are engaged in exports. Of course, the biggest elephant in the room is the debt restructuring process. Now, if you're talking of FDI and bilateral projects, we feel the biggest elephant in the room is the external debt restructuring. Until such time we are successfully able to restructure the external debt and get a certification from IMF that we are debt sustainable, and the external creditors accept that credit repayment, then once you become debt sustainable and get a certification, and that is the only time that Sri Lanka can open out confidently to international markets, both for bilateral projects as well as individual investments. Bilateral projects that have got stalled as a result of the debt moratorium, or rather debt default, largely, for example, if you take the Central Expressway project, the Katnayaka Airport, all those have stopped because bilateral credit default. And we have had discussion both in the Japanese embassy and the Chinese embassy, and those embassies have given a very firm statement that immediately we sign off the debt sustainability certification for the IMF that they'll commence those projects. So in my view, if the bilateral projects start, a lot of money will come into the market, a lot of money will come into the system. Those are multi-billion-dollar projects. So we can revive the economy in terms of, the construction sector that got largely affected. The people who supply metal, people who supply sand, the people who are driving tippers, even the small timers and others can really get into the bandwagon if and when. I think by the first quarter of next year, Dhananath, we should be able to hopefully get the debt restructuring done, is my estimate, and hopefully we should start the projects. And along with that, rest of it will start. For example, this morning we had a meeting with the High Commissioner designate to the UK, Mr. Rohit Bogolagama, along with the UK Sri Lanka Business Council. And what they pointed out was that in order for British investors to come into Sri Lanka, there's an issue with regard to capital repatriation, because if you can't send the money out, they will bring the money into the country. Now, those capital repatriation and the capital account has been frozen because we have an issue on the external front. So once the external front is resolved, once the debt sustainability is achieved, we can open the capital accounts back and people can bring in money and they can take it out. So in addition to the Indian bloc and the Eastern bloc, there's also possibility of getting investments from those countries, which we are currently dried up because of the debt sustainability. So therefore, to me, from the Ceylon Chamber, our biggest push is to get the debt sustainability done. That is why it is important that the government to present a budget that was on that path. For instance, the increase in government sector salaries, normally if it was public sector salary increase, would have to be financed by way of borrowings. We would have offered so many things free of charge in the budget and expected to finance it through borrowings. But this time we couldn't do that. Our borrowings are limited, we can't print money. But the increase, I guess, in the VAT rate of 3% will go to finance the cost of public sector salaries of 130 billion, 150 billion rupees. So we have to live within our means. If you look at the whole budget speech of the President, he emphasizes the fact that we have to live within our means, and that is based on which the budget has been prepared. And I think we should walk that path until such time fundamentals are clear, the foundation is strong, that we can then start again, afford to give incentives if we can. That's not the way to go forward, but if people are looking for it, I guess that is a way. The other lowest hanging fruit that the Chamber perceives that we can achieve the shortest period of time is tourism. There is no restriction in terms of FDIs there. We have a fantastic infrastructure. Only the flights, we just spoke to the High Commission, asked whether they can evaluate the possibility of connecting British Airways back to Colombo and some other European flights back to Colombo, direct flights, so that we can bring the tourists to Colombo without any hindrance. At the moment, there's an issue regard to the flights. But if we can resolve that issue, and we can get the 2 million to 4 million, irrespective of the high spending tourists or low spending tourists, doesn't matter. If we can increase the numbers, there will be direct benefit to the economy. And we feel that is one selling advantage Sri Lanka has above everything else. To us, exports of garments and the export sector will time. It is not a short-term achievable target, but tourism is something that we can achieve in the immediate short term. And if we can get that going, there will be employment generated, self-employment will be generated, supplies will be better than what it is, vegetable supplies to whatever will benefit from the tourism. So we have given a plan, and one of actually the Ceylon Chamber proposal that they remove the visa fee from Indian travel to Sri Lanka in order to make the travel cheap. Because 5 people come to Sri Lanka, it will cost $500. So we said, even that is the cost. So, I mean, there are certain things they're doing, but also I saw this year's proposals that the excise department going to liberalize certain excise laws into the tourism industry, so that they'll permit certain places to sell soft alcohol and create certain tourism areas. So those are necessary to keep the hype if you want to develop tourism in this country. So those are some of the proposals that we have given, and I know the revenue targets are very ambitious. If the revenue targets can't be achieved, it's a slippage of the revenue target that will pressure back on the fiscal deficit. So only way government can cut is by capital expenditure. There's 1.2 trillion allocated, about 400 trillion more than last year. So there can be a squeezing of the capital expenditure if that happens, but that will again put pressure on growth. So we hope that the revenue target they're estimating achievable is tough in a market that doesn't grow, an economy that doesn't grow, where inflation is again back to about 2-3% single digit. It may be difficult to get those targets, my view is, but I hope they get it, so that won't put pressure on all of us. So, as a Ceylon Chamber and us, we all remain optimistic. I mean, we know the problems that we face. There is no point in being critical and analyzing the past. We have to find a way of how we can overcome this problem. Because Sri Lankans generally are critical by nature in every situation that we come across. So we need to find a way out of the current problem we are facing as a nation. And I always, in every forum I go to, I say that this is not one man's problem or a problem for people. It's a problem of the entire country. And unless we, as a citizen, take ownership to the problem and consider it our problem, there's no one else going to come and resolve it for you. So with those few words, ladies and gentlemen, I thank you once again for inviting me. I hope I was able to convey to you the views of Ceylon Chamber and the private sector. Thank you very much.
That was Mr. Duminda Hulangamua, President of the Ceylon Chamber of Commerce and Senior Partner, Ernst & Young, Chartered Accountants. Thank you, sir, for gracing the occasion and for imparting some valuable insights. We are pleased to have with us today the CEO of Advocata Institute, Mr. Dhananath Fernando, speaking on the economic transformation and SOE reforms. The platform is yours, sir.
President presented the budget with the theme of Sammajivika, which is a term in Buddhism which says that you basically balance your expenditure compared to your income. However, my task today, which was given by Professor Watavala, is also a concept in Buddhism called Maraya, which is on state-owned enterprises reforms, which is the Maraya in this game. And without combating that Maraya, I do not think that we have a future, or we have one thing that we all have to say, that is, you may attain Nibbana. Sinhalemma කියනවා නම් රජයට අයිති ව්‍යාපාර කියන මායාව පරාජය කරන්න නැති වුණොත් එහෙම අයවැය සහජීවන නැත්තම් සහජීවක අයවැයක් වුණාට අපි හැමෝටම වෙන්නේ නිවන් දකින්න තමයි. So with that I would like to start my remarks. On the budget, there are a few specifics on some of the state-owned enterprises, but let me set the context. When a government comes to power, especially the finance minister, if your government is new, the finance minister walks to the chamber to present the budget like a philosopher, like Aristotle or Plato. It's very philosophical. You're always looking at future, 2048, 2025, strategy. That's the first 2 years of any government. And in the middle of it, you are trying to become an accountant because you know you are struggling a bit. You try to bring the numbers, revenue, expenditure, GDP, percentage. That's the middle. And towards the end, when you are closing to an election, basically you are becoming a Santa Claus. You are just coming and saying, I'm giving this, giving that. And most of it is also bearing with the state-owned enterprises, sadly. So that's the focus. In my view, there's only one game in town if we really want to come out, and that's restructuring state-owned enterprises. And also, let's also admit, in terms of government policy, there are things that you say in the budget, but you do not implement. I think Sureni provided a good color of how good we are saying in the budget, but not implementing. But also there is another side, that you do not say in the budget, but also you implement. I think even the VAT increment it wasn't mentioned in the budget, but of course it was done. So I think there are a lot of state-owned enterprises reforms which was not in the budget, but which has to implement, and that is one of the key recommendations even in the IMF governance report, because that SOE law has to go through and SOE reforms has to be done. Now the gravity of these SOE reforms was just mentioned in, if I remember right, page number 209 in the English version of the budget document. It was in all 3 languages. And one particular state-owned enterprise reform which was mentioned in the budget was, I think, which was touched upon by a few other speakers, is recapitalization of state banks, which is about 450 billion. As you know, the devil is in the details. Maraya is in the details. So when you go through it, they have specifically mentioned that The reason for the recapitalization of the two state banks or the banking sector is because of the debt incurred by two state institutes, which is equivalent to 1.8 trillion. Now just think about this number. I know it's because when there's a budget, people get confused with millions, billions, and now it has come to the level of trillions. Now think about what is the amount of 1.8 trillion. Now our interest payments is about 2.6 trillion. And our debt accumulated on those two institutes are 1.8 trillion. And President's allocation for social safety net is about 200 billion. So that means if you leave this 1.8 trillion as an equivalent of the social safety net, basically you can pay 9 years of social safety net from the debt of these two institutes. I just wanted to give a flavor of the gravity of this debt. So the reason that they have proposed to recapitalize these two banks are because most of the debt is in these two banks. And with the debt restructuring process with Mr. Hulangam just spoke, when you are restructuring that debt, basically these banks are going to get a massive hit. Basically their capital adequacy ratio will not be adequate. So because of that, they have to recapitalize the bank, which is 450 billion from the taxpayer money. Now imagine how much is 450 billion for individual citizen. That's approximately about 19,500 rupees per Sri Lankan. So if you are a household of probably 4, you are contributing about 80,000 rupees just for recapitalization of those banks, which is coming from losses of state-owned enterprises. So there's no other game in town. If we really want to have a Yahajivika Ayava, you have to defeat the Marya, which is state-owned enterprises. I know this is probably not the popular view at the same time, because when you say state-owned enterprises reforms, you are selling it, that's all myths, but that is the only game in town. For 4 reasons. Because when you reform state-owned enterprises, you can do 4 things which are critical for the government. Of course, we know everyone admitted that our revenue targets are ambitious. I mean, about 4 trillion is our expenditure, our revenue targets. When you reform state-owned enterprises, of course, you are getting a revenue. If you sell the asset, you are getting a revenue. And even if you are allowing a proper management team to conduct the operation, you are getting a profit, and out of that profit, 30% comes as corporate tax to the government. And additionally, there's a VAT of now 18%. So basically, the first problem of revenue problem can be sorted if you have better run organization. So we have to basically move the state-owned enterprises to the private sector. Second, government has an expenditure problem. I heard the Secretary to the Ministry of Finance, Mrs. Sirivardhana, mentioned in 2022, the losses were 700 billion, he just mentioned, and now it has become 300 billion accumulated across 52 state-owned enterprises. So the expenditure is going for state-owned enterprises. When you give it out, you are basically saving your expenditure which is going out. So that's the game that the government should play. The third one is, we all know there's a problem of FDIs. You need to attract investors. And to attract investors, again, state-owned enterprises reforms is the remedy, because you attract investors, you sell a stake, even in this case, the 20% of the state banks, which I recommend. But on a competitive basis, when you do that, you attract investors, including the dollar revenue. So those 3 can be done only through state-owned enterprises reform. So only thing that has been mentioned in the budget is about this 20%, allowing a strategic investor or employees to buy the 20% of the shares of the state banks. But the reasoning behind is the losses which has caused by these 2 institutes. And as you all know, my institute tracks about 527 such state-owned enterprises. Not everyone is a commercial enterprise, but mainly most of it are colossally loss-making. Or some are making profits, but if you compare the ROE or the ROA, which is not compatible or competitive enough. So the state-owned enterprises reforms is a must, and that's the main game in town. Now let's also turn on the government salary increments and how it can be connected to the state-owned enterprises reforms, because we saw 133 billion has been allocated for government state sector salary increment. The ideal way that they could have done is to also come up with a reform to shrink or like cut down the government sector cadre. Because without doing that, when you just increase the salaries, we know the vicious cycle. Now it is as a living expenditure index, or like it's as a for living expenditure. Next year budget, they all will ask to add it to the basic salary. And when you add it to the basic salary, it will add on pensions, so on and so forth. So we are expanding, ballooning the expenditure by doing this, but I understand it doesn't mean the government sector workers are having a very good time, not that they are drinking Jack Daniel and driving Mercedes Benzes. Of course, they are also going on a very difficult time. But when you try to do it through an inflationary measure or by allowing the interest rates to go up, then again, we will be back to square number one. Nivan suwa tamai. So because of that, ideally, there could have been a proposal to bring down the state sector cadre, but also look at one state-owned enterprises last year, 2022, the Treasury Secretary mentioned, it made losses of 622 billion for 8 months. So the allocation for state sector salary increment is 133 billion. So it's almost about 6 times the losses of state-owned enterprises. So that's why if we really want to have an efficient government sector, and if we really want to take this forward, basically we have to have the state-owned enterprises reforms. So the update, I am slightly concerned. Of course, my chairman Murtaza is a member of the state-owned enterprises restructuring unit, and I met the chairman Suresh Shah. So what they have done for the moment is they have done a policy of state-owned enterprises management, and they are planning to bring the law, I think, in January, December. And they're trying a model like a Temasek model, which is in Singapore, where there's a holding company and all the state-owned enterprises will be brought down that holding company, and at the same time there are 7 in the list that will be divested in an immediate basis, which includes Lanka Hospital, Sri Lankan Airlines, Telecom, Hyatt, so on and so forth. But my key messaging is the state-owned enterprises, the only main proposal here is basically the state sector, the state banks, but the reason behind is basically the debt which has been accumulated by these 2 institutes, which is colossal. I mean, it's an unimaginable number that we have incurred, and without that, it is beyond whoever the political party who comes to power in future. You have to fix it, otherwise we all will have future, because you cannot basically fix a 600 billion loss, a hole in a budget with like a small tax increment, and it's not going to work. So that is the game in the town, and we all have to stand for those state-owned enterprises reforms, because otherwise there will be no future at all. So I will wrap up with that, but my messaging is, while the president said it's a yaha ජීවික අයවැය, මේක යහ ජීවික අයවැයක් වුණාට රජයට ඉති ව්‍යාපාර ප්‍රතිව්‍යුහගත නොකරන මාරයා පරාජය කරේ නැත්නම් අපි හැමෝටම වෙන්නේ නිවන් දකින්න. Thank you.
That was Mr. Dannath Fernando, CEO, Advocata Institute. Thank you, sir, for your time and effort and for bringing in the much required energy along with many insights. As Mr. Duminda Hulangamu leaves for another commitment for today, I now cordially invite Mr. Duminda to please step forward to accept this token of appreciation on behalf of CMA Sri Lanka and all of us from the hands of Professor Lakshman R. Watawala. Thank you, sir. A much awaited topic in today's date is on the massive amounts of debt we are facing as a nation, and thus we have Mr. Talal Rafi, economist and expert member of the World Economic Forum, speaking on economic implications and on meeting IMF obligations. Over to you, sir.
Good afternoon, everyone. First of all, my thanks to Professor Vattavala and the CMA Governing Council for inviting me to speak on this quite important topic, economic implications and meeting IMF obligations. So I'm going to divide my talk into a few parts. So first is where is Sri Lanka now, very briefly, before I go on to an important topic. If we're going to talk about going to the IMF and its obligations, we had to find out why we go to the IMF so often. And then we'll talk on the IMF obligations as a whole, then the need for tough reforms, especially ones in the IMF program, and what would be the implications. And finally, where are we? What is the decision we need to make? So anybody who has been in Sri Lanka for the last couple of years knows that compared to last July, we are in a much better situation, though not out of the woods. Last year, we were facing 70% inflation, market rates were at over 30%. So now things have stabilized a bit, especially on the macro front. But there is a long way to go. But there are two concerns. The first is, and the biggest concern is, as far as the IMF program goes, the external debt restructuring. So we went to the IMF because we couldn't service our external debt. So here again, it's a concern because it's something that's beyond our control. So not something that we can do as a nation. Even if we tighten our belt, we cannot still convince our creditors to take the necessary cuts. The other thing is political stability. Unfortunately, at a time when we need tough reforms, we are 12 months away from a presidential election. So naturally, we're going to see a lot of populist promises, and most people don't know the benefits. So there is a sort of a tough time for politicians to go through this period. So now, especially when the topic is about the IMF, I want to talk about like what went wrong. So why are we going to the IMF so many times? Look, India went through a similar crisis to us in 1991. They did the necessary reforms, and they haven't been to the IMF since then. Same with Thailand, 1997, they didn't go to the IMF. And other countries such as Chile and others went, but never defaulted. So we claim to have opened our economy in 1977, but we are a very frequent visitor to the IMF. So a reason is, in my view, and this is backed by evidence, is that we opened the economy, but we didn't open it enough. It's like opening the door, but we opened it halfway, very half-hearted way we opened in 1997. And there are a few reasons for this. One is, for example, we are one of the most protected economies in the world, as Advocata and others would agree. Because even when it comes to trade facilitation, trade liberalization, we are even worse than least developed countries, like poor countries in Africa and Asia. So here again, you can't call yourself an open economy and at the same time, have the term that you're one of the most protected economies in the world. So there itself is a contradiction. The second thing is the SOEs. As the previous speaker spoke, 527 state-owned enterprises. So this is not usual for an economy that claims to have liberalized itself in 1977. So out of the over 500 state-owned enterprises, over 100 have commercial interests. So they're competing with the private sector. So you wouldn't really call this a free market economy when the government, which is supposed to be the policymaker and the regulator, is competing with the private sector. And the other thing is, of course, labor reforms, last updated in the 1950s. We have one of the highest retrenchment costs. Land reforms, the government of Srimao Bandaranaike in the 1970s nationalized a lot of land. But in 1977, most of the land was not given back. Now I think in the budget, the president has allocated, but that's a tiny amount. So 82% of land is owned by the government. So for the 22 million people and the private sector, there's only 18% of land. So land and labor are major factors for economy. So when the government is so heavily involved in land and other aspects, you can't really once again call it an open economy. And the last thing is a very interesting thing. So when you look at the non-tradable portion of the GDP, in 1977, when we opened our economy, it was 75%. So naturally, for an economy that opens itself, you would expect the non-tradable sector to decrease. But Sri Lanka, it was unique. It went the other way around. Today, the non-tradable sector is at 75%. So only 25% is tradable. So this kind of explains, which I'll touch on later, why we go to the IMF, why we have a balance of payment crisis. So then coming on to the IMF obligations, don't have a lot of time to speak about this, but I'll give a very brief thing on the broader targets. One is primary budget surplus of 2.3% by 2025. So if you look at Sri Lanka, primary budget surplus is revenue minus expenditure minus interest rates. So interest payments, sorry. Even with interest payments, 70% of our revenue. So even when you take away interest payments, we have only been able to attain a primary budget surplus 4 times in 75 years. So 71 out of 75 years, we can't even match our, balance our budget, even when you exclude the interest payments. So since independence, all governments are to blame. So that shows that how disastrous the fiscal policy has been in Sri Lanka's 75-year history. So that is one thing the IMF wants to tackle. The second thing is reducing public debt from 128%, which is huge, to 95%. So usually a developing country should have it around 70%. So if you look at Zambia and Ghana, their public debt to GDP is much lower, I think around 70%. But the IMF program there is much harsher on them. Here we've got a sort of a lenient deal here. So even when you come to 95% in 2032, that itself is a bit on the line of unsustainable debt. So that layers, therein lies the problem. The other thing is reducing gross financing needs from 34% to 13%, again by 2027. So that is including the payments for the maturities. So these are tough things. So right now, I mean, last year it was 34% of GDP, which is extremely unsustainable. Especially, of course, you can finance it, but the fact is we are shut out of international capital markets, and our ability to borrow is also very limited. So these are the broader IMF obligations, summarizing it. So then we need to work on the tough reforms. So as you know, the IMF program has a few reforms that are quite tough for any government to take on, but these are must. So Dharanath spoke a lot about the SOE reforms, but I'll just briefly touch on it. In 2021, 86% of government revenue went to paying salaries and pensions of the public sector. So that was, we have a public sector that is 1.4 million. So I'm not saying it's a bad thing. There are many excellent civil servants, but by having such a bloated service, it means that the people who are doing a good job are not paid high enough, because it has been spread over so thin. And the other thing is, as I mentioned, the government is competing with the private sector. So here again, when you look at investors, they don't want to necessarily invest in sectors where the government of that country itself is competing. So you have various examples: banking sector, insurance, hotels. I mean, what does the government have to do in the hotel sector? I don't understand. So the other thing is, SOEs also have the advantage of almost a blank check when it comes to support from the treasury. So they are again unfair competition in the market. And the borrowings, especially from the state banks. As you know, we need a huge fund to just recapitalize the banks, and that is because largely lent to the public sector. So this sort of crowds out what is left for the private sector, which should be driving economic growth. And also, this has been a reason for very large fiscal deficits. As I mentioned, we can't even balance our primary budget for 71 out of 75 years. So large fiscal deficits has shown that Sri Lanka consistently has higher inflation rate when compared to the rest of the region. So when you have higher inflation rates, that's because of mostly monetary financing and others, it means that for real interest rates to be positive, the interest rates are higher. So that means the borrowing costs are higher for the private sector. So we are naturally not in an able position to compete with the rest of the region. The second thing is trade liberalization. So if you look at countries that opened, in South Asia, Sri Lanka was the first to open its economy. When you look at from the developing world, Chile and Sri Lanka were among the first two from the developing countries to open their economies. So let's look at comparison. You know, Chile has 44 trade agreements. Sri Lanka has 3. So there again lies. So a lot of people talk, even political parties like to talk about Vietnam. But Vietnam has 26 trade agreements. You know, they are able to have export over 100% of GDP because they're able to import as well. So therein lies their ability to even compete with a manufacturing superpower such as China. So Sri Lanka naturally has missed the bus. So because if you look, another factor is 70% of global trade is supplying global value chains. So it's not the old days when you manufacture everything within a country and export. Those days are gone. You know, it's like it's mostly supplying, being part of value chains, like supplying Apple's supply value chain, or Toyota, like a famous entrepreneur in Sri Lanka, Rohan Palawatha, he manufactures sensors for automobile supply chains for like Toyota and Nissan. So that is an example of where we should be, what we should be doing, making use of our comparative advantage. Another few factors are, 64% of global exports are done by multinational companies. And when you look at the knowledge-intensive exports globally, 82% are done by multinational companies, not by domestic companies. So if you want to get multinational companies, I'm sorry to say this, but 22 million people and an economy of just above 70 billion is not enough to attract anyone here. So they need to be able to use Sri Lanka to provide some of the niche, like add value in like 10 to 15% of their supply chain, so they can import and export outside. So this is where places like Tamil Nadu and others are. In India, Tamil Nadu itself is set to be a $1 trillion economy by 2034. So they are trying to tap into the global value chains, which China, Vietnam have successfully done, especially China. So another thing why I say this is because 40% of global trade is concentrated, meaning that the products are produced by 3 or less countries, like soybean, US and Brazil, semiconductors, Taiwan. So cars, mostly Japan and Germany, though a number of other countries manufacture. So here again lies the thing that we need to adhere to what we have a comparative advantage in, where we can find a competitive advantage. So with that, just to give an example of Argentina. So if you look from the economic circles, Argentina is sort of laughed at. It's sort of a basket case. Nobody takes it seriously. But nobody knows that in the early 1900s, Argentina was the 5th largest economy in the world. And at that time, at the rate it was going, people said it could be more successful than the US. But what went wrong? After the 1950s, they followed this thing called import substitution, trying to be self-sufficient. They wanted to put high import barriers and try to produce everything within themselves. So what this resulted was that most of the industries that were exporting tried to focus more on the domestic market and lost competitiveness globally. So naturally, in order to balance their payments, they started, instead of exports, it was, the alternative was debt, which sort of piled up. And with a non-competitive industrial base, they had to, the exports came down drastically. So here again, a very successful economy that was at the very top has defaulted 9 times. Argentina has defaulted 9 times. Sri Lanka, this is our first. So Sri Lanka also has shown signs of, in 1970, we tried to be self-sufficient. That was a disaster, which brought in the government of J.R. Jayawardena in 1977, which led to, as I mentioned, reforms, but not done wholeheartedly. So even after the mid-2000s, we sort of tried to go in that path. As I mentioned, that's why the non-tradable sector of the GDP has increased drastically. The third thing about the IMF program, though there are a lot, I'll just touch on 3. The third one is the independence of the central bank. So this is very, very important. So currently I'm writing an article for the International Monetary Fund on this, on the Central Bank Act. So here, a lot of economies, like for example, Germany, before it joined the euro, its central bank focused on price stability, which meant the job of the central bank is focusing on the stability of the currency. So everything else takes care of itself. And Germany today is a high-end economy because they didn't have a central bank that was adjusting rates to help the country compete on cheaper prices, but on the other way around. So they became more innovative and high-end. So price stability also means taxes are adjusted better because normally, you know, tax rates, the slabs are not frequently adjusted. So here again, it's nominal. So when there is high inflation, usually the people who are suffering are the taxpayers. The other thing is investments. In a high environment of inflation, investors keep away. And at the same time, interest rates. High inflation means for real interest rates to be positive, interest rates have to be high. The other thing is politicization of interest rates. We see various examples. At the end of the term of a government, they try to bring the interest rates down to boom the economy. That has been done not just in Sri Lanka, but even in the US. And monetary financing has been a primary cause of fiscal discipline. So also a reason why we sort of are in the situation we are right now. So finally concluding, what is Sri Lanka's future? As I mentioned, we have two paths. One is, how are we going to take this forward? Are we going to do the very tough structural reforms, tighten our belt a little bit further, and not have to go to the IMF again, like how India and Thailand did? Or we can, of course, you know, kick the can down the road, push off the reforms for later, do the small bandages, and be like Argentina, a basket case. With such a thing, with the debt, even by 2032 being at 95%, we could very well high possibility of defaulting once again. So the choice is for the people, where do you want to see it? Whether it's structural reforms and having a very good long-term future for the economy, or short-term stability but repeated economic troubles. With that, I'll conclude. Thank you very much.
That was Mr. Talal Rafi, economist and expert member of the World Economic Forum. Thank you, sir, for your time and for imparting some valuable insights for our discussion of today. We also have Mr. Hasitha Premaratna, the Managing Director of Brandex, speaking on earning the much-needed foreign exchange by boosting exports. Over to you, sir.
So talking about the budget, I think already there have been many forums where different views have been expressed. But when you're talking about exports and the industry, to be very honest, there isn't too many references in the budget. At least at this point of time, we haven't had too many areas that are specifically covered related to any positive or negative implications. In a way, it's good in a budget when you are not being referred, because that means at least the consistency will maintain and things will not change. Because in budgets, most of the time in the history, what we have seen is that things keep changing too many times, and as a result, there is more uncertainty and more volatility to the businesses. So from an export perspective, few areas I wanted to touch on. I spoke about this yesterday as well, but then I'll reiterate and elaborate a little bit more here. So what are the customers, our brands, our customers are looking for from people who are exporting from the country? Because our competition is all over the world. We have it in almost everywhere else: China, India, Bangladesh, Cambodia, all the manufacturing destinations. I'm referring apparel plus other areas. And there is a significant amount of demand today that has come down, and as a result of that, obviously the supply base is keeping open. So this situation is going to lead us to a more challenging environment. So it's important to understand what are the expectations of the customers today. So if I take a little bit of apparel experience and elaborate more to talk about the other industries as well. So first thing, what we need really as a country when you're exporting is the access to the markets. When I say access at a point of almost equality. We are talking about equality because in one country has duty-free access and other country doesn't have duty-free, but you have to pay duty to enter the market. Obviously, that's a point of kind of, you're already, before you start the match, you have lost it. So we had, we already have from Sri Lanka to Europe the duty-free access, the GSP Plus extended for another 3 years, which is a positive thing. I think that's definitely helpful. But if you look at the list of areas mentioned in the budget related to the FTAs, we're talking about China, we're talking about Indonesia, we're talking about Thailand. So these are good, right? These are good, but then from a export perspective, manufacturing export perspective, those countries also have very similar type of exports that we could make and be competitive. So whether we can make a significant gain from those agreements is a question mark. But having said that, India is also mentioned, and India, we already have an FTA. So that's an area where we really have to push and see how we can make it a bit more favorable than what it is today. Why I say that is because I'll take simple example from the apparel industry. So there is, the FTA says that you can access the Indian market, you can export to the Indian market duty-free only up to 8 million pieces. Only 8 million pieces of apparel that you can export duty-free. So if you put $5 per product each unit, you're talking about 40, maybe maximum $50 million of exports you can do to Indian market, which is not at all adequate in the scheme of things, right? So that cap in the negotiations, hopefully we can push and either remove the cap ideally, if not at least extend that cap so that we have more headroom to export to the Indian market. Because Indian market is a simple statistic, almost 300 million people will get into the mid-income bracket, mid and the high income bracket in the next year, by next year, which means that's the size of the US population. Entire United States population is about 300 million. So you're talking about a massive buying power in the Indian domestic market, which the good old days, it have been very price driven, but now things are getting a little bit different because money comes in and brand consciousness comes in. As a result, we have a definite opportunity to grow there. And all the global brands, almost all the global brands are already there, if not there, trying to get in. So it's the opportunity we seated here, if we have a duty-free agreement, to really penetrate further. And another example to quote, Bangladesh is duty-free to India, right? They have a free trade agreement, no caps. That was signed sometime in 2018-19. Over the last 4 years, from Bangladesh to India, the exports have gone up to $1 billion. It just touched $1 billion. So that's the potential of a duty-free agreement. And I think while we have efforts to put more and more FTAs with different countries, I think Indian FTA and getting some work done on that front will be absolutely crucial if we want to grow the exports and especially look at the exploiting the opportunity that is in our neighborhood. So that's number one, market access. While budget talks about the policy framework around it, I think a focused approach can give much significant impact. And we need short-term impact from an export perspective, as we all know. So that's number one. Number two that I wanted to touch on is capacity building. So obviously we need to build the capacities. So in Sri Lanka, of course, right now there is excess of capacity because of the current global conditions that we are experiencing. But hopefully as the markets, the demand improve globally, we should be able to build more capacity, especially on the fabric side. Now today, if you look at all the BOI zones, almost all the zones are full, right? You can't get too much of expansion opportunities, particularly if it's a water related industry, right? Either your intake of water or the discharge of water, there are a lot of restrictions. So again, budget is referring to setting up zones, which is good. I think Bingiri was referred and few other areas. We started off some time back in East Coast as well. But it's important that we finish what we start on one side and also have the capacity build at the right places. So again, there are about 4 or 5 locations highlighted to set zones. But my thinking is that we should maybe target 1 or 2 and close that and say that here we have the capacity now. Also, existing zones, if we can expand a bit more, that's even better. Because we are already having the infrastructure, social networks, all of that, that will fast track the growth. Because we need a little bit of an injection in the short run. Long term is very important, right? But while we talk about long term, we need also injection for the short term to really lift ourselves out of these challenges that we are going through. So the capacity building is number 2. Again, touched upon in the budget, but a focused implementation approach is crucial there. The third important area is the value addition of our products, our exports. You can say the diversification of exports on one side. Also, you can talk about the existing exports to also diversify into new product ranges, value-added products, high-end products. Applies to apparel as well. My experience in the apparel sector is wherever we have been able to innovate a new product, bring newness to the market, always we have got a better price. Always we've got better value addition. And that's very important to look at from a customer perspective and come out with this newness of the product. Now, this newness of the product means you need to invest into R&D, research and development. Today, if you look at some of the larger companies like ourselves, we have been doing continuous investment into research and development, R&D, to create this newness. And we are talking about making more and more of that. However, the SME sector, which is the backbone of the industry, right, needs more support on that front, because obviously for a smaller company, it's not easy to allocate money for R&D because of the day-to-day cash flow challenges. So again, I saw there is some funds allocated for SME related loans, 30 billion rupees or something like that. I forget the exact amount. And also encouraging the provincial level empowerment of export development, which is a good thing. So that gives the support to the SME sector, small and medium-sized companies, to be encouraged to invest into different segments. So this funds, where should it go, has not been specified in the budget, but I would have liked it to see being specified into some of the areas where this money disbursement can be arranged through the banking system ideally, or through even the associations that we have, industry associations that we have, that we can facilitate through that. Example, our Joint Apparel Association is the industry arm for the apparel sector, can be a vehicle that can be kind of working through to facilitate and support this requirement, because each industry will know where that money can be channeled in a more effective way. So again, coming back to the implementation, it's important that allocation gets into the right hands as well as for the right purpose, so that the impact can be significant. So that's the third area that I want to touch. The fourth area is logistics, right? Again, as an exporter, we want to get our product to our markets, overseas markets, fast as possible. Sooner the better, because lead time today is a big conversation. So in getting there, obviously the logistics have been, both inbound and outbound, have been quite challenging in the last 2-3 years post-COVID, especially things settling down now. But more importantly, the speed of access to the market can be improved. And there is an element of funds allocated to improve and boost the logistics segments, both inbound logistics as well as the outbound logistics. So I believe these channels will help and support more towards stabilizing the logistics requirements of the exporters, where we really have to get our feeder vessels and the connections to be more proactively connected. So that's the fourth one. The fifth one, the final one I want to touch, which is a very important one today, is sustainability. If you look at, I was in some of the conferences recently in US, and most of the buyers, most of the people are talking about consumer behavior changing towards sustainable products. Sustainable product means one side environment, social, as well as the governance aspects, ESG. Now, this segment can attract the business to a country, because if you're seen and positioned as a sustainable destination for manufacturing, that can be a very, very important competitive advantage for us. So my belief is that apparel industries is something that is very important, and Sri Lanka has already been able to position itself as a sustainable destination compared to some of the competitive nations. We have, but that doesn't mean that we can relax, because others are catching up. Others are fast catching up. So we have to be at the cutting edge of the sustainability, for which we need to make sure that, again, investments are made as a country as well, while we do as corporates, as organizations. As a country also, this need to be done. Again, budget has a section on green economy, which is good, which is very, very important. I think we need to, again, have a plan in which how we are going to, on one side, set up things more effectively, supporting the environmental requirements, social aspects, as well as the governance side. But then having said that, we also have to market ourselves, brand ourselves as a sustainable destination. Now, are we doing it enough? Definitely not. Right? So it's important that this whole piece of that green economy section in the budget, which I went through yesterday, has some interesting concepts and policies and thoughts, but quickly turn into action and allocate the funds to make the impact so that we can also market ourselves as a sustainable destination, because that's definitely going to be a differentiating factor in the world we are living in today. So these 5 things I wanted to just touch on: market access on one side, capacity building on the other side, then thirdly, newness of the product, bringing diversification into exports, thirdly, logistics, and fifth is sustainability. So these 5 things are very important in the eyes of a customer today, global customer, to position our exports to take it to the next level. So my expectation is that in all 5 areas, the budget has touched these things. And we all know budgets are very good at touching things, right? But we need to go beyond touching in a piece of paper to real action on the ground. And taking that action on the ground is required by a proper vehicle, as well as the right players involved in taking it forward. So that is really the message that I wanted to leave here. And I think in those 5 areas, if we push, definitely we have a competitive edge, and we can really boost and pick up back from the much needed exports and bring the foreign currency to the country. Thank you very much.
That was Mr. Hasitha Premaratna, Managing Director of Brandex. Thank you, sir, for your time and for imparting some valuable insights for our discussion today. There is no one better than Dr. Kulathunga Rajapaksha, the Emeritus Managing Director of the DSI Group, to speak on the impact of the budget on the manufacturing industry and SMEs. The platform is yours, sir.
Thank you, Professor, for allowing me to speak a few words on industry. As Mr. Hasitha Premaratna mentioned, in the budget, of course, not a single word about industry, unfortunately. But in a way, it's good that they are not mentioned, because then at least he mentioned that we may have some sort of a consistency in the policies. He touched upon the first item of the FTA on India, which I have been covering from the very inception, about the Indian exports to India to the garment quota of 8,000 pieces. I think the subject we have been discussing for the last almost 20 years, and we have not been successful in getting a single piece increased. So at least this time, with the negotiators, we should be able to do it, because that market is very high. But we have been trying to do this. Unfortunately, the protected Indian market has not allowed to do it. So that means that's one area that we have to harp on. And apart from that, we are now trying to explore the possibility of having FTAs with Thailand, Indonesia, etc. But there also, we may face the same situation unless the negotiators are smart enough to get into those markets so that we can export our products in the volumes that we are talking about. Then with regard to the industrial sector, in the budget, of course, we have nothing, but the industrial sector also needs some sort of incentive. We never ask for tax holidays, we don't ask for duty-free cars, but we need only the facilitation. As Mr. Hasitha Premaratna mentioned, the logistics sector, we need to improve our logistics to be competitive. Now, as far as industries are concerned, we have 2 sectors. One is the export industry, one is the domestic industry. In the case of domestic industry, we do have an issue about the taxes that we are having. Now, the disposable income has come down because of the taxes that we are paying. Now, we are paying, VAT has increased from 15 to 18%. On top of that, we have the social security tax of 2.5%, which has a cascading effect, VAT of course can be recouped, but this cannot be recouped. So therefore, already the products that we manufacture locally has gone up by almost 20%, because most of the small timers, there's no recouping of VAT system. Now the VAT has brought down, the threshold has brought down. Still for all, the local market, the VAT collection is not streamlined. Therefore, definitely the local market items will go up. Then further, the exemption list has been reduced, I understand. We don't know what items will come, which will be axed again. Then if that comes up, if the oil prices and the other agriculture products also come up with the VAT regime, then local prices will go up again. So that means the buying power will go down. The local industries will find it difficult to manage their local industries. Already, because of the COVID, a lot of industries have been affected. And the recent restriction of dollars, there are several industries that have been affected. Therefore, this will be another blow. So therefore, the increasing of disposable income is extremely important for the local industry to survive. When it comes to the exports, as far as exports are concerned, one of the largest exports that we are doing is the rubber product exports. Now, what is the situation of the rubber product exports? Rubber exports have been there because we had the natural rubber manufactured in Sri Lanka. 150,000 metric tons was the production of natural rubber production as of about 10 years ago. Today, it has come down to 75,000 metric tons. So that means, even though we do export the rubber products, a substantial portion of natural rubber is being imported now to manufacture the rubber products. So therefore, there should be a plan to grow the natural rubber. Right now, there is no plan. The rubber subsidy has been brought down. Therefore, there is no replantation going on. Therefore, the value addition of rubber products will come to a standstill because we have to import rubber and manufacture rubber. Right now, it's happening. Even all the gloves manufacturers, they are importing latex. And end product manufacturers, solid rubber manufacturers are also importing natural rubber. Therefore, the amount of value addition that we do now is very minimal. Earlier, of course, it's not the case because we had natural rubber. Now that situation is also affected. Then other thing is, because of the bank interest. Now, why we cannot export most of the product non-competitive in the sense, our energy cost is high, bank interest is high, our logistics are expensive, we don't have the transport facilities after 10 o'clock. Therefore, most of the companies, they are unable to manufacture, have the production line efficiently done. So therefore, these are the areas that the budget would have looked into it. Right now, of course, there's nothing, but these are the areas because we need the domestic market selling will not work. We need dollars. To have dollars, the industries must be geared to have exports. To have exports, there should be some sort of competitive advantage that buyers will have. Right now, we do have the advantage of GSP for the European countries, but others we don't have anything, unless, of course, we compete with our own arrangements. But right now, there is, as I mentioned, bank interest, energy, logistics, wages. Now, the government has increased the salaries of government servants by 10,000 rupees. Very good, it has to be done. But during this period, due to the COVID crisis and the crisis that we had, private sector has already increased the salaries of workers many times. Otherwise, they will leave. But now, what happens in the previous budgets, the moment they increase the salaries of the government, they make a statement saying that the private sector to follow. If they do that, we will have another problem because we will have a trade unions coming up and asking for another 10,000 rupees the private sector. So that is going to be another disaster. So therefore, I hope government will not follow that arrangement again. Then again, another issue is the employment, the brain drain. The brain drain is very badly affected the private sector, especially the middle management and top management. There are a lot of people are leaving now. We are finding it extremely difficult the private sector to manage because of that. Then the income that government revenue generation has been mostly depending on the VAT increase, 15 to 18%. And that also, if you go into the detail, they found the VAT collection from the international trade. What do you mean by international trade? Means the more imports will coming, and from that the collection of VAT going to be collected. So that means we are going to have more imports coming in by way of liberalization, by removing the cess and various things, more imports will coming up. So that means we need more dollars to do the imports. So where are we going to get more dollars? It's silent totally. So we must have more exports. So there's nothing, any incentive given to the exports. So therefore, without exports, we don't have dollars. I don't know how we are going to get more imports done without the dollars. Then, of course, we have to do the external borrowing again. Then other thing is, we must see that how the other countries are doing. Now, for example, the Indian market. Now, they are doing lot of export programs to develop the import, to the exports. Now, just read the recent action taken by Kerala. Export promotion policy in 2023 incentives export enterprises. It proposes frameworks for financial incentives and institutional backups for the exports. Fiscal incentives suggested in the policy include export-based capital investment, a subsidy of 35%. Capital investment subsidy of 35% for export-related items. So that is now these are the incentives offered by our neighboring countries. So that means we do have to compete with those countries who are offering such incentives. In addition to the lower bank interest, they issue capital subsidy as well. We are not asking any subsidies as industrialists, but at least they should be facilitated to improve our productivity. That is not happening. Then other thing is the cash flows. Suddenly you find a lot of taxes coming in. Now recently, the super gain tax came up suddenly from nowhere. And that was to be paid before. Now it has come to our end. Our cash flow has been very badly affected. The super gain tax is suddenly brought in. So therefore, if we have a consistent tax policy, at least then of course we can plan our cash flow. Now what happens is that is also not happening. So these are the few things that we had looked into. Then again about the SME sector. I think Mr. Vattavala has been clamoring about this SME sector. SME, even though we mentioned many times SME is the backbone of the industry, I don't think anything has happened so far for the development of the SME sector. Now in this budget, they allocated 30 billion for the development of the SME sector. So as Mr. Premaratna mentioned, SME sector is a small sector. They don't have facility to do R&D and all that, but they are mostly affected by the cash flow. That is the biggest problem they have. Now, why not we follow the policy that is implemented in India, in the SME sector? They have an act. The small sector, the SME sector is looked after by the government by an act. Because whatever the product that they manufacture to the large company, the payment has to be made within 14 days. That has been given in an act. I think Mr. Vattavala can explain that. It has been done there. So we have been clamoring so many times to get that done. Then of course the SME sector, who will finally graduate as a large companies. But right now, all the SME sectors, whether they supply to the supermarkets or any other organization, the biggest issue that they are facing is the cash flow, their payments. Their payments are going to up to 60 to 90 days. But India is not the case. They have brought in a legislation, SME sector suppliers to the large sector must be paid through a banking system within 14 days. If they can bring in, the SME sector will definitely develop largely. Right now, SME sector has been stagnant for so many days and it will be stagnant even in further unless some sort of assistance. The ADB loan facilities are now coming up. With that 30 million, of course, definitely not enough, but at least for a start that is good if you can do that. Then other thing is the infrastructure, the road transportation and the infrastructure. Right now, we have only good highway that is Colombo to Galle and Matara. That's the only highway that is operating in the proper way. Other highways are halfly done. If you can increase those highways as also, because as industries we have facilities to have set up factories in various places. But due to these logistic reasons, because if you want to travel to Kandy today, it takes more than 3 hours. But these are the areas that is required, especially for the industries. Industries, they do need the logistics. Without the logistics industry, because industries has to be based in a place where you have the raw material. But right now that is not happening. So therefore, these are things have been not looked into by the budget. So if we can look into those things, the industries will definitely develop because we are competitive enough. As Mr. Hasita Premaratna mentioned, why we have been successful in garment industry? Because we don't even a single piece, single raw material is not manufactured here, but still we have done extremely well. That means we can do the value addition part of it. Even the rubber products also same situation. We are doing the value addition, we are doing exports, but we are competitive enough. But only thing, there is no small areas that have been looked into. If they can look into those areas, surely our country can develop. But we never asked, industry will never ask the subsidies. We never ask for duty-free vehicles. We never ask for tax holidays. But we need only the facilitation to develop the industry. If that can be done, I think the country can develop very fast, because it is through the industry that the employments can be generated, not by anything else. Now all the industries, all the graduates who are passing, engineers and mechanics and all that, it is the industry that can absorb. So the plantation sector must help, because rubber plantation is, rubber is the main item in the rubber industry. That expansion has not taken place. Our productivity is extremely low. Our rubber plantation production is extremely low. So these are the areas that has to be given certain amount of incentive and increase the productivity. The productivity part is not happening. Therefore, most of the industries who have the raw material cutting and the feeders, we are in a difficulty. That is why rubber industry is in a stagnant position today, because we don't have the basic raw material that we had before. As I mentioned before, we were manufacturing 150,000 metric tons of rubber 10 years ago. Has come down to 75,000. That is the basic raw material required for the tire industry. That is not happening. So therefore, if these basic raw materials can be manufactured here, our value addition will be very high, our foreign exchange earning will be high, and that itself will give the impetus to have the free markets, because the foreign exchange is the extremely requirement. Thank you very much for the...
Thank you, Dr. Kulatunga Rajapaksha, the Emeritus Managing Director of the DSI Group. We are pleased to have you with us today, and thank you for imparting valuable insights in furtherance of our discussion. Yet another requirement of the age is fast-tracking Sri Lanka's tourism development. Speaking on the same, we have Mr. Priyantha Fernando, the Chairman of the Sri Lanka Tourism Development Authority. Over to you, sir.
Professor Watawala and CMA, thank you very much for inviting me to speak a few words on how fast-tracking tourism development in Sri Lanka could assist the economy. Well, on the subject, when we are talking about the budget and the repercussions, I must first start off by saying, unfortunately, the expectations of the tourist industry has not been fully met by the budget. Yes, there's certain reference in the budget for tourism, but is it appropriate? We are talking of another airport in Hinguraggoda. Do we need another airport in Hinguraggoda right now? We have Mattala. We have Katunayaka, where an expansion program could take place. Mattala is not operating to its fullest capacity. Then we are talking about bringing in new legislation in tourism. Is it a time to bring in new legislation? What's the need? It is very vague. So we have to go into many areas. Probably today Professor Watawala wants me to speak on fast-tracking tourism development in Sri Lanka to find out exactly what sort of a contribution tourism could make towards the economy. Well, let me start off by looking at global tourism. Comparing to 2019, the global tourism has recovered this year up to now by about 80%. But if we look at our region, the South Asian and the Pacific region, yet the recovery rate has not touched the average. It's only about 61% or 60% recovery of the level we were in 2019. So there's a long distance to go, and going by UNWTO forecast, we are expecting an average annual growth of travel and tourism by the year 2032 by 5.8%. Also, the global economy GDP average is around 2.7%, and it's much higher. It is expected to generate 126 million employment opportunities globally through tourism. Well, these are the global projections made by UNWTO, and let's look at how the South Asian region will fare. Well, the South Asian region in the past has not had a fair share. But going by the projections, going up to 2032, it has a higher growth rate than most of the other countries. So we can expect certain better returns through tourism for the region. Total tourism movements, if we look at exactly comparing 2020, 21, 2022, and 2023, where are we? The South Asian Pacific region is yet below the levels which it was in 2019. And by 2025, we should be able to have a growth, a slight growth over where we are right now. Talking of tourist movements, the Asian Pacific region should indicate 32% growth from where we were in 2019 by 2025. So there's hope and potential for the Asian region as well as Sri Lanka. Asia Pacific, if you have to look at the income generated, 3.294 billion, and that is unfortunately it's not very clear. It's 159 million in 2021, which is less than what it was in 2019. Definitely in the coming years, we will be able to register better figures where total contribution is concerned. Let me get on to where we are comparing with 2018. Sri Lanka had 2.3 million tourist arrivals with the earnings of $4.3 billion in 2018. By 2021, the number of tourist arrivals to Sri Lanka had gone down to 495 with only $506 million as earnings. I am happy to state that over the last 2 years, we have managed to recover. In 2021, from 194,000 tourist arrivals, in 2022, we managed to register 720,000 arrivals with earnings of $1.15 billion. Up to now, up to end of October, we have registered over 1.1 million tourist arrivals with over $1.5 billion as tourism earnings, and right now, tourism is the second largest foreign exchange earner for the economy. Going back to 2018, yes, 60% of the foreign exchange earned for the country was through Sri Lankans working abroad, the apparel sector, and tourism. We have high hopes. We are quite confident that by 2027, we should be able to make a contribution of $7.5 billion by way through tourism. The growth rate, if we are to project it up to 2032, it will even off or average around 5.2% growth per annum. Looking at Sri Lanka's current inventory, we have 4,595 accommodation units in the formal sector, accounting for 53,070 hotel rooms. Then the other, like restaurants, food courts, tourist shops, travel agencies which are registered with SLTDA accounts for 2,631 establishments. This is what we call the formal sector, which comes under the purview of the SLTDA. We control the quality standards that they have to maintain. But when looking at the inventory leading into 2029, with our projections of achieving 4 million tourist arrivals by 2029, we need more capacity to come in. Right now, we have to factor in the informal sector, which accounts for almost 65,000 hotel rooms against 53,000 hotel rooms in the formal sector. This is a major challenge to bring them into the formal sector because the informal sector has an overall impact on the destination and the image. We are competing with many countries, and it's very important that we maintain quality and standards of the tourist industry if we are to compete and get our fair share. Also, overall sustainability is hinged on how best we can market the product and get in more tourists. Well, the expectations are very high, where His Excellency the President expects 5 million tourist arrivals by 2029. He expects at least 2.5 million of high-end tourists coming into Sri Lanka, spending at least $500 per day. From where we are right now, where the average earning is around $185 per tourist per day, it's a major challenge that we are facing. Also, talking of high-end tourists, currently we have about 8,000 to 8,500 rooms out of the 53,000 rooms that could cater for high-end tourists. If we do not meet the quality and standards that are demanded by high-end tourists, it's going to have a negative impact overall on the medium to long term. So it has to be a cautious approach where we try to match the demand with our supply and try to give them exactly what they are after. We have brought this to the notice of His Excellency the President as well as the others, saying that we'll have to take a step at a time. And next year, this year we set a target of 1,550,000 tourist arrivals, which we are quite confident that we will achieve. And next year we have set a target of 2.3 million tourist arrivals with earnings of $4 billion US. Well, having said that, tourism is largely hinged on internal and external factors that could have a major impact on tourism. Right now, I said before that comparing with 2019, global tourism has recovered by 80%. But if you look at outbound from the major European destinations or our traditional markets such as UK, Germany, France, they had their own problems over the last 12 to 15 months. They have been taking holidays, but instead of going to long-haul destinations, it has been to short-haul destinations. Right now, our largest generator of tourist traffic is India, followed by Russia. Then comes UK and Germany, and China has not lived up to expectations up to now. This year it has contributed only with about 58,000 arrivals, where we had expectations that by now it would have exceeded 120,000 arrivals. Sri Lanka is within the 20 countries that China has identified for Chinese tourists to travel. Having said that, there are many other limitations. In certain markets, we can create demand. But unfortunately, in 2018, taking into account the charter operators which were there and the scheduled flights, we had over 52 airlines operating into Sri Lanka. Right now, it has reduced to about 30 airlines, including the charters, so the inbound seat capacity has drastically reduced. Certain routes such as Australia, Japan, Korea, there's greater demand. Even from Europe, but unfortunately the number of direct flights have reduced. You might find that the load factors are very high from originating points in Europe, but they come via a midpoint, either Maldives or the Middle East, and the disembarking numbers are low as 45 to 50% at our destination. Even looking at the national carrier, it is very attractive for people from Australia, and so on to use Sri Lankan. But unfortunately, most seats are taken by transit traffic as well as those traveling to India and the Middle East destinations. So these are the challenges that we are faced with in increasing the numbers. Going up to 2029, we are targeting, as I said before, 4 million tourist arrivals, and the room capacity that will be required will be around 140,000 rooms. As you can see right now, there's an oversupply situation in the country which has drastically affected the average room rates as well as the income that is being generated, because it gives a tendency for price wars where the economy loses on the long run. If you look at 2022, 21, 22, 23, and even next year, there's a major gap to be filled, and most of it is in Colombo, within the city limits. There's an overcapacity situation right now. Looking at tourism sustainability, we want to work on regional development, providing opportunities for SMEs, because tourism has a multiplier effect where the benefits could go down to grassroots level. And we are going in for planned tourism development, and we have already set up 9 provincial sustainable tourism units around the country to make sure that we reach the grassroots levels and create opportunity for SMEs at a provincial level to boom. In moving forward, we have introduced the tourism policy. Together with the tourism policy, we have introduced the tourism strategic plan leading up to 2025. And hopefully, over the next couple of years, we'll be developing a 10-year plan going into 2035. Foreign direct investment in tourism, at the moment, it's below expected levels. One thing is, comparing it with other destination countries, the incentives that we offer are very much lower than what other countries offer. Even for local investment, we have not created a climax where they could invest and get a fair return. The debt situation within the industry is over 700 billion. This is where they had high expectations that the budget will provide some relief. It has not come forward, but we are looking at ways and means as to how we could overcome this problem. We have been speaking to the banks, the central bank, to see how we can be of assistance to the stakeholders. We have to create an investor-friendly and conducive environment in moving forward. There are a couple of brand names that will be opening up shortly over the next 4 to 5 months, including Intercontinental coming to Sri Lanka. In fast-tracking Sri Lanka's tourism development, there's a role for all, for the stakeholders, the government, the professional organizations, the community, as well as a role for the media. Where the government is concerned, though they recognize that the tourism will make a positive contribution towards the economy, the investment in tourism or assisting the stakeholders has not happened over the last 1.5 to 2 years. And we are working very hard through the ministry to convince the government that there has to be some relief offered if the industry is to be developed on a sustainable platform. Also, for the professional organizations, there's a message that they could carry. Yes, we have to weather the storm, which we have been going through for the last 3 years, and there will be better times for investment in tourism in the years to come. Thanks for your attention, and I will leave you with the latest slogan that we have come up with: Sri Lanka, you will come back for more, because we have been having 35% repeat visitors, and that's where we have to really focus and get them back. Thank you.
Thank you, Mr. Priyantha Fernando, the Chairman of the Sri Lanka Tourism Development Authority, for your valuable time spent with us imparting knowledge amidst your busy schedule. Next on agenda is the panel discussion and the Q&A session moderated by Mr. Ruchira Pereira, Council Member of CMA Sri Lanka and Treasurer OPA. Over to you, Mr. Ruchira.
Right. So until we get questions, may I first ask this question from Mr. Priyantha, since you were the last presenter. From the government budget, the government has allocated 200 billion for the development of the tourism sector. Do you think this is enough, or in what areas you think the focus should be on?
That's in addition to the TDL and the contribution that we get through the embarkation tax, which is $5 per passenger coming into Sri Lanka. So with targeting 2.3 million tourist arrivals, plus when you're talking of the embarkation tax, it includes the Sri Lankans as well, which is built into the ticket, and they pay the embarkation tax. And then the 1% of the TDL. There we have to do more work because unfortunately, as per the calculations that we have done, only about 51% of the TDL income comes in. 62% of the registered establishments have not filed their TDL returns, which has to be filed on a quarterly basis. And we are taking it very strongly because we will not be renewing their licenses for 2024 and also making the recommendation for liquor license in 2024 unless they pay up the arrears. With that coming in, if we can increase the inflow of TDL and with the embarkation tax and what has been provided, yes, we should be able to manage.
Go for the revenue target. Right. So this question is for Dannath, and maybe this question can be answered by Nishta as well as by Talal and also by Sureni. So now, in your presentation also, Dannath, you have mentioned that 20% of the stake of government, state banks, to be given to the private sector. You think, you have touched little on this, how this should be done, should it be, I think in your presentation you have mentioned, Nishta, how this should be done, should it be done through the capital market, and how it will boost the economy?
I think what they have suggested is do it through the stock exchange, it will boost the capital markets. My view is actually, we could have gone beyond 20% because the controlling power has to have in a good investor, but I understand in the political context it may be difficult because you're at the latter stage of you're facing an election. But there's, I think, a misperception. The ownership to the government is not just because you need to control it. There can be a better operation because the debt that is in the balance sheets of these two state banks is basically the malpractices of those enterprises which has spilled over, including for Sri Lankan Airlines and so many other state institutes. So I think they are going to do it through the capital markets, and I think that's a good move in my view.
Yeah, the budget is not clear whether it's through the capital market. It says it will open up 20%, but I think other discussions have. And it will be good if it goes through the stock exchange. It brings a lot of liquidity into the market as well as opportunity for investors to come in. So, opportunity, and it will also save up government funds for better priorities, I would imagine.
It's not clear whether it's a new share issue or sale of a stake.
Yes, so that investment has to be done because there is a shortfall. Yeah. So if they don't go for this stake, the government will have to put it in. So to that extent, they'll save that amount of money, and it will be, I think, a direct infusion by the market, the outsiders.
Okay. Talal?
Right. So regarding the 20%, I think it's a good move and could be done with the capital markets. But as always, I think the stake should be much higher. I don't necessarily agree with this thing about giving 51% to the government and 49% to the private sector, and then later some government comes and tries to take it back. So out of the reforms, necessarily not the most important, but I always encourage privatization as a reform because that is the toughest to reverse. Because the government, of course, the way we manage out of the finances, it's always difficult to renationalize, as you have to put it. So that's a way forward.
Sureni, you want to add anything on that?
Nothing to add. I think they covered most of the things, so I'm not going to add anything on this context. Thank you.
Okay.
No, actually, one of the most important reasons of this is that there will be no political interference. You see, once you privatize, that means make it a public quoted company, others can't go and interfere in this, because all these monies that have been given by the Bank of Ceylon and People's Bank are all on treasury guarantees. So in future that will not happen, and I think this privatization is mainly done, and I am sure IMF has insisted it, not to give the whole controlling interest to one, but to remove this control and interference that is taking place.
Thank you, Rosa. Hasita, and also for Mr. Rajapaksha, now this question is on the trade agreements. From the budget, it is proposed that we should go for new trade agreements with countries such as Thailand, Indonesia, Bangladesh, and China, and also that we should expand on the existing agreement with India. So how will this impact on the manufacturing companies as a whole and also for the apparel companies? Hasita has touched on this, but I would like to know more details about this.
No, trade agreements, my understanding is we must see that our exports are increasing. If our exports are not increasing, I see no reason why we should go for a trade agreement. But you mentioned about Singapore. Singapore is already a free country. How much we have exported in Singapore? There's no trade agreement required because Singapore is also a free country. You can export anything to Singapore. But other trade agreements, unfortunately, it is one-way traffic. You know, the agreement is such that you have a certain amount of items duty-free on one side and certain amount duty-free on the other side. So what happens is, the more items will come into Sri Lanka than more items going out of Sri Lanka. So the trade agreement must be such that the ultimate aim of the trade agreement must be that we must increase our exports. If our exports are not increasing, Mr. Premaratna mentioned very clearly, the simple line of 8,000 quota limit. I can remember we have been discussing this for the last 20 years. Nothing has happened. Because there are many reasons behind it. So it is a question of negotiating to the benefit of the country. That is not happening right now. So the most important thing is any trade agreement, we must increase our own exports. Because see, any manufacturing industry, manufacturing products to Sri Lankan market with 20 trillion population not economical. We must expand. We must export. To do the exports, we need some sort of arrangement. Now GSP is a good item that we are exporting. If you lose GSP again, our exports will come down. But now there's another thing that I mentioned, trade agreements always mention the tariff. Tariff is a very old school of controlling. New control system is for the compliance and the quality controls. Now when we export rubber products, we have to get a certification, international certification of the quality of the products. It is not the tariff that is controlling, it is the certification. Some of the certificates we have to get from the importing country. So if they don't issue certificate, we can export. So that's why the compliance and all that is coming up. So therefore, we must see that definitely our productivity must improve, our quality must improve, our R&D must improve. There are a lot of things that we got to do. But right now it is not happening because the bank interest rate is same for manufacturers, exporters and traders. All are same rate. So therefore, definitely we are not competitive. And the other thing is lot of red tape you have. How many taxes we are paying? We have EPF, ETF, social security tax, then VAT, all that, a lot of clerical efforts are being going into these things. These must be simplified. That is not happening now. Thank you.
Yeah, I think I'll add an additional point to what Mr. Kulathunga Rajapaksha said and also to what I spoke about earlier. That is, trade agreements also, while it boosts the exports on one side, it's also a way of kind of influencing in geopolitics. So that's another angle that comes with the FTAs. So one thing that's going on at the moment, as you all know, is the India and China, though it's not openly said, but there is a little bit of a Cold War behind the scenes that's happening. And China doesn't encourage Indian exports. And similarly, India doesn't encourage China to send items into the country as well. So that's actually our opportunity because, in fact, to make this a little more of a formal thing, what India is doing now, as we speak, is they have introduced what they call Indian Standard Bureau, which is ISB, which is an institute that have been created to vet any overseas supplier supplying items to India, which means that they will select, in other words, that certificate will now be selectively given to people whom they want to give. So Chinese, informally, the message is that Chinese suppliers will find it very difficult to get that certificate. Now, in that backdrop, we have found, I'm sure other industries also may have heard about this already, at least in apparel industry, we have found quite a bit of the brands who are currently importing into India from China are looking for alternate destinations, right? So that's where Sri Lanka can be a real player, because we have this sports activewear capability to make those products which China makes today for India. We also have the capability. So if we negotiate at this point of time our FTA in a more positive way, and India might also respond, because Indians are also looking for that capability to be established, one inside India, but in the interim also from the outside to replicate the Chinese imports. So that's why I believe that it's not only apparel, even in the other segments, this might be a right time for our negotiators to get to the table, because always geopolitics play a role in these FTAs, whether we like it or not. It's not necessarily trade only, but there is a big element of geopolitics there as well. So I think it might be a right time to make use of this situation, because a lot of opportunity to kind of transfer some part of the Chinese imports into India to be kind of sent from Sri Lanka to India.
Thank you, Asta. Thank you, Mr. Kultur. Professor, I would like to know from you, moving into education, are you happy about the budget allocation given for the education sector, especially to set up private universities and also to convert some of the existing campuses, private campuses, into universities?
No, actually, now since you are a professional body, I think you all should know as to how we are really existing. Because this budget is only allocating money maybe for universities, technical education and everything. Now we have the OPA, they were all present here, I think the secretary is here. You know, the professional bodies are operating, it's on a government-based policy that was done in 1959. It was a policy that was really framed by the Trade Ministry to set up the Institute of Chartered Accountants of Sri Lanka. That was the time that they really studied it, and it's a government policy. But unfortunately, this policy, they seem to have forgotten it, you know. They are now going for all public funded projects. Now you see, when the Institute of Chartered Accountants was set up in 59, the policy was that initially the government supported the Institute of Chartered Accountants. They gave the land, then they put it in the buildings and also in the education. But they told them that after a certain period, you are going to be self-supporting. I think that is the way, because you see, in this crisis situation, it is going to be very difficult for the government to put funding. You know that so many people are leaving the country because they can't get the proper education in Sri Lanka, or the timely education. As I said earlier, as soon as you pass out from the university, you should be able to go A-level, you should be able to go to university and get the degree by 21 or 22. But now that is not happening. As a result, this problem is there. So I think even for the public universities, they will not be able to get all the money that is required. So the government should tell them, we give you this amount of grant, say 50 million rupees. The balance amount you generate. You see, even at the moment, the public universities are conducting courses for which they are charging. And then that will enable them not only to cater to the needs of the country, but also to the lecturers, because they will get additional income. Then why should they go abroad? They don't have to go abroad. Then they can get additional income which will help them. So this is one policy. That's why I said this public-private partnership is very essential. If you tell the universities, this is the only money, but if you tell them, this is the money we are going and cut down on the students or on the facilities, then it's going to be a major problem for the country. So I think these are things that the government, in this crisis situation, we need to take measures that will really help the public. So, you know, a professional is a person who looks after the public interest. We are there to look after public. So I feel that there has to be a drastic change in all these things, and the professional bodies are never mentioned in any of these government budget or whatever it is. No, of course they don't give us the money, but they can tell us, you can produce 30,000, you can produce 40,000 professionals for this country. Now the OPA has about 50, 60 professionals. They will be able to produce maybe the accountants, the technicians, the supply chain managers. So many areas that are available. So I think government should really make use of the professional bodies, how we are managing, and use that management for managing the crisis situation that we are having.
Mr. Hennayaka Bandara, would you like to add any comments on that? Okay. Dhanat, this question is for you. Now, capital improvement process that they have suggested, do you think that it should be done only for state banks or it should be done for the banking sector as a whole to improve the asset quality?
I'm also not sure. I think this must be based on the
Nishta also.
Based on the asset quality review done
Yes.
by the IMF.
Yeah.
So likely it would be for the entire banking sector. And also in terms of the recapitalization, I think that what was pronounced was to, because already the taxpayers has to be about 450 billion. So the rest is going to take from divesting about 20% of the state banks. Because already there's, the entire banking sector is also in bit of a stress on one side. On one side, those who hold the bonds on local currency have also gained, but with the foreign, like the external debt restructuring and the non-performing loans ratio being going above the ceiling, they will be under stress. So I think it may be for the entire banking sector, but I'm not very sure or clear on what has been given in the budget details.
Nishta, you want to add any comments on that?
Yes, I think they should follow the recommendation of that review that was done and that covered the whole sector. And if at all there is stress at any level, that capitalization has to come in fast. So if it's the private sector, obviously they'll have to raise it on their own. But the government banks is what the budget has taken care of.
Okay. Talal, you want to add any comments on that?
If I'm to quickly actually give a comment on your previous question, which is whether the expenditure on education is sufficient. So I kind of did an analysis for the last 10 years, and based on that, for education and research, the government allocates as a percentage of GDP only less than 1%. Its maximum has been 1%, or it's either less than 1%. And from the annual budget, this analysis we did for a development partner, based on that, on average per year, out of total expenditure, only 5 to 6% goes for education and research. So definitely, this is not sufficient. And on top of that, in this budget, there's many proposals to establish new universities. Actually, it's more than 4. It's close to 5 to 6, I guess. So the problem is, during the last whole couple of months, the lecturers, the universities, state universities especially, has been raising this problem that the brain drain has caused a serious problem. They have a serious problem of resources, human resources. Yet we are proposing new universities, and without any justification or a plan on how we're going to use these existing resources or utilize these existing resources to these universities. So we do have a serious problem already, which is lack of human resources, and yet we are going ahead with establishing new universities, and we don't see any analysis behind it. So this is of course a serious problem. It's not just the lack of budget allocation, it's also lack of justification as to how these proposals ended up in the budget speech is also problematic. Thank you.
Talal, on the previous question, do you want to add any comments?
On the previous question,
capital improvement process.
Yes, I think the other speakers answered,
Okay.
but I'll touch
You are
on
in agreement
little bit
with
on the education part, because I previously gave a talk on that, because there's a lot to be done in that. You know, we are talking of an economy that has to compete, but education is inadequate. If you look at, for example, an interesting stat is that out of students who have got the ranks, the results to get into universities, only 23% have a spot in the 16 universities. So 77%, that's 130 to 150,000 students. These are not students who sit at the back of the class, but students who are eligible to go into universities, who have done their work correctly, are unable to go. So I think that's one of the major...
There's a mismatch, yeah. So on the, again, this question can be answered by Nishta or Dhanat. Now, from the budget proposals, they have proposed to allocate land from government ministries or government agencies to construction companies to build, and thereafter to transfer it on a rent basis, so that they will recover the total amount plus dividends. After that, it will be transferred back to the government agencies. Do you think it's a feasible solution? Because, you may give a land, but then of course to build a building, you have to have a cash for these companies. They have gone through a lot of troubles in the past. You think it's a feasible solution?
Yeah, given that they have to put in the cash flows have to come in, and that's not what they're supporting only with the land. But on the cash flow side, given that you get into this agreement of the rental, you have a cash flow to back up a financing scheme. So to that extent, a government guaranteed cash, if you can sign that up, it will be like a BOT project, build, operate and transfer project. If the government also comes into that contract, I think banks will lend on the strength of the cash flow, so it will be feasible, I think.
Dannath, you would add anything on that?
Yeah, I also have the doubt how the construction companies are going to put money, because already there was a problem where the government hasn't paid the construction companies on one side. So I wasn't sure, and also we had to check about the pricing structure, because when you just give the land and ask to price, of course either you can price it higher and that will have an entire impact on the construction and the housing and so on and so forth. So I think it has to be, that's why we always recommend to follow the competitive process with adhering to the governance structures, because otherwise there can be a lot of pricing distortions which will have a knockdown effect across the board.
Okay, thank you. Thank you everyone. Thank you for the panelists. I think in the interest of time, we'll wind up the Q&A session now. So now let me invite Mr. Hinnaka Bandara to express his comments on the budget.
Good evening to all of you. Ladies and gentlemen, eminent speakers and tax experts spoke on budget proposals with technical analysis and the impact on various sectors in the economy they represent. They also spoke of the merits and demerits of the new tax proposals and the impact on individual, business organizations, and society at large. As we are aware, certain economists are of the view that current economic climate will last for at least next 3 to 4 years, although increase in tax revenue has been identified as an immediate solution by the government to address the current economic crisis. To this effect, policymakers identified several changes to the tax system in the recent past, and most of the changes have already been implemented with relevant laws, but the total outcome has yet to be materialized. However, I believe that individual behavior of all key players in the tax system, that is policymakers, tax administrators, taxpayers, tax consultants, superior courts, and public, is very significant to achieve the expected outcome of the policy changes and budget proposals. If all these players influence each other to improve tax collection mechanism and maintain high tax compliance, it will positively impact on increase in tax to GDP and overcome the current economic crisis to the extent possible. Let me explain a little bit on this area. Already all the speakers have touched upon main points, but nevertheless, let me explain a little bit. We had an inconsistent tax system without a national tax policy framework for more than 2 decades, and tax policies of the country always change with elections and change of political leadership. This has badly impacted tax administration and taxpaying in society. Therefore, national tax policy framework should be introduced, as the present economic crisis has given a lesson to the tax legislators on the importance and the necessity of a stable, consistent tax policy framework for the country. It is very important that the tax administrators should be equipped with new technologies to make a knowledge-based tax system for the country, monitor national and international transactions, reduce revenue leakages through tax avoidance and evasion schemes, including tax frauds. Further, continuous training and knowledge improvement process is also required to update tax administrators to achieve government revenue targets. At the same time, the traditional thinking patterns and the attitude of the taxpayers, in particular the large taxpayers, should also be changed to increase the tax revenue. Both payments and returns compliance should be done by following the rule of law with the proper tax planning procedures. Professionally qualified tax consultants can play a greater role in the tax system to increase the tax revenue to overcome the economic crisis of the country. It is a commonly accepted fact that unqualified practitioners are engaged in tax avoidance and evasion due to non-availability of professional ethics and for other reasons. More importantly, issuing prompt decision on pending tax cases at superior courts where interpretation of tax statutes and other tax-related matters are essential in reducing tax disputes. This needs to be accelerated to the extent possible so that tax administrators can follow the court decision for future cases where the same facts are available, and it will be result in reducing the tax disputes and increasing the tax revenue. As you already heard, I hope you all remember, at the parliament level, they discussed about the recoverability of 950 billion outstanding taxes. Out of all these amounts, mainly the main taxpayers are responsible. So one of the reasons is that there is a huge delay in providing the decision by the superior courts. I'm sure that if they can expedite their decision-making process, the tax department will be able to collect more taxes. The last point I would like to highlight is that in an economic crisis, most of the transactions do not happen properly, and as a result, the shadow of black economy of the country broadens. Therefore, to reveal the tax avoidance and evasion schemes, the role of whistleblower in the tax system is very important for any country. The knowledge of the public on this area is comparatively not at acceptable levels in our country due to various reasons. So let me stop at this point. Thank you. Over to you, Rajira.
Thank you, Mr. H.M. Hennayaka Bandara, Vice President, CMA Sri Lanka, and Past President, SAFA. We would now award our tokens of appreciation to our valued speakers. We call forward Professor Lakshmana Vatavala to give away the following tokens of appreciation. Ms. Sureni Viratunga, Senior Research Analyst, Verite Research. Mr. Nistar Sulaiman, Tax Partner at Ernst & Young Chartered Accountants. Mr. Dhananath Fernando, CEO, Advocata Institute. Mr. Talal Rafi, economist and expert member of the World Economic Forum. Mr. Hasitha Premaratna, Managing Director of Brandix. Dr. Kulatunga Rajapaksha, Emeritus Managing Director, DSI Group. And Mr. Priyantha Fernando, Chairman, Sri Lanka Tourism Development Authority. A big thank you to all our speakers who devolved their immense knowledge on us this evening. As we proceed to the end of today's discussion, I now call forward Mr. P. Gajendra, Chairman of the Taxation Committee and Council Member CMA, to deliver the vote of thanks.
Thank you, Dilani. As we come to the end of a very thoughtful discussion on the recently presented the budget, as a chairman of the Taxation Committee, it's an honor and privilege to deliver the vote of thanks. First of all, I would like to thank our founder president, Professor Lakshmana Vattavala, for organizing this seminar by coordinating with all the presenters and delivering the welcome address. Mr. Srivatana explained about the rationale behind the proposals, and we are very thankful for him to accept our invitation despite his busy schedules, as he is the most wanted person these days. Moving on that, Ms. Veeradunga delivered the Budget 2023 Accountability and Transparency, whereas Mr. Sulaiman take through us for the detailed proposals in the 2024 budget, which was followed by Mr. Kulangamua as the President of Chamber of Commerce. He explained the pros and cons of the budget proposal 2024 and the impact on business. Mr. Fernando discussed about the economic transformation and SOE reforms. Meanwhile, economic implication and the meeting IMF obligation was explained in detail by Mr. Rafi. As one of the largest exporters of the country's as a managing director, Mr. Premaratna explained the importance of earning much needed foreign currency by boosting the exports, as well as the importance of putting a strong negotiation on the upcoming FTAs and the trade negotiations. Dr. Rajabaksha explained about the importance of the manufacturing industry and the SMEs and impacts from the current budget. Mr. Fernando, as the chairman of the Sri Lanka Tourism Development Authority, explained the requirement for fast-tracking the Sri Lanka tourism development, which was followed by a question and answer which was moderated by our council member, Mr. Ruchira, who is presently holding the position of treasurer of OPA as well, and vice president of CMA as well as past president of SAFA, Mr. Henaka Bandara, delivered the point of view from the expert side. And now I would like everybody to join for the tea. Thank you.
With that, we have come to the end of today's proceedings. I thank you for your wonderful participation. Refreshments are arranged for you. Do enjoy. It's me, Dilani Jayatilaka, signing off for today. Have a blessed evening.